Sorry about the delay today. Just a heads up, I am having some internet outages in my area, and they've been down since around 7 a.m. this morning. I've been trying to mess around. So just a heads up, it has been going in and out. Hopefully, they said they would restore it by 11:15 my time. Mic check. Can you hear me now? Perfect. I'm risking starting a stream here because, again, internet connection has been spotty since 7 a.m. My provider has issued that they're working on it and should have restored by 11:15 a.m. So another 2 hours. So hopefully it doesn't impact the stream, but it has been dropping connection. I had no connection for the last 2 hours, but we're starting things now. But the main important thing is it should be back by power hour, or sorry, FOMC. I'm just getting my bearings here because I haven't had a chance to really scan the market constructively this morning as much as I'm liking to. So feel free to note any observations that you may have. I know we did get some data this morning. Jobless claims came in line. Housing starts took a little bit of a fall, which in theory softens up rates. Even my whole charts got messed up with this friggin' internet outage. It's brutal. My whole TradingView watch list of like 150 names just got all screwed up. I hate that. I work so hard to organize things. Is the music okay, Sarfraz? Music and sound balance okay, hopefully. Perfect. Setting up a few things here, and then we'll discuss some potential movers. Again, feel free to put some tickers, any observations that you're making. Again, I've been dealing with some pretty shitty Wi-Fi this morning, so just still getting things sorted. Buy right now, gapping up slightly positive on the session. The IWM is negative, so we're seeing a little bit of weakness creeping back into small caps. Natural gas strong on the session. Let's actually flip you to the main chart here. We have gold doing flat today, silver's flat, crude oil up 0.5%, copper up 0.7, natural gas up 1.53. So let's jump into some charts here. This is SPY. So SPY is sitting right on this upsloping wedge pattern. It did fill the gap yesterday, so that's a very, very positive sign. Intraday. Let's look at some volume levels. So there's a lot of support right around this previous pivot. This is where you had a nice little reversal, impulse breakout, and then a rejection, bounce, back up to the highs. Now you're hovering right on that gap zone. So that 597 Pierce zone should be very, very good for support. And if we lose that, let's see, there's quite a bit of support there. Then we're really coming down into that previous little gap fill. Let's look at the 15-minute, 30-minute chart. Look at the 15-minute chart. So if we start to clear this 598 pivot, we should push into this 599.50 zone. Then you likely get a little bit of a pullback. If you hold above this wick high, then I think we can push for that priority low at 600. Yeah, a lot of resistance there. Again, I'm just going to wait for the first few minutes. Alright, let's look at the Dixie. Dixie just trading sideways. Crude oil, that's again very, very strong on the session. Had a dip back down to support, now getting bought right back up. Let's look at the yields. Obviously the FOMC meeting is today, so there's going to be a lot of opportunity in the back half of the session. That's kind of where I think the predominant trading will take place. I'm not expecting SPY to do much earlier on. But again, you are trading at some near-term support, so in terms of bias, it is upside for the time being. Okay. Steel stocks doing well today, so Nucor gapping up. That was our new entry yesterday. Let's look at STLD. Steel Dynamics not really performing well. X, that's just still stuck there. Cleveland Cliffs, CLF. That had a nice little potential breakout candle, but not really getting follow through. So look for some continuation in some of these steel stocks. We did tap 126.50 in the pre-market on Nucor. That chart is looking fairly decent. Let's look at Nvidia. Look at Hood in the pre-market, catching some volume. Hood trading at 75, still into a ton of resistance up here on Hood. I'm very close to potentially taking some more put options on Hood. We've traded this ticker quite successfully in recent sessions. MRK, a little bit of down pressure. Let's look at UNH. UNH, really no movement there. Tesla gapping up about $1 here. Tesla still looks like it's probably going to go lower, but you are trying to break out of this falling wedge pattern. So I don't think Tesla's going to Maybe Tesla has a push up into this 320, but I think it's going to get some rejection later on and retest that 310. You can see this beautiful hourly chart, 50-minute parallel channel. Tesla's on watch for a potential short. It's definitely looking much, much weaker. Let's look at plug power, PLUG. Plug still holding steady here, gapping up by about 2 cents. Let's look at AMD, that was your strong horse, getting some follow through. Micron, getting a little bit of follow through after a daily topping tail. Let's look at some of those solar stocks again. So Run seeing a little bit more downside. This probably is going to retest the lows at some point. Very tough name to trade. Enphase, we traded that successfully yesterday. Right now Enphase is holding steady down around that previous little entry zone that we bought at. We may get another trade if it takes out the lows. Let's look at FSLR. FSLR coming down slightly a little bit, but still holding steady. Let's look at RBLX. Roblox still a very, very strong stock. I mean, a one-way freight train to the upside. Biogen, not really moving too much. Gilead, GILD. It's not moving too much. Let's look at Snowflake, ticker Snow. Not doing too much here. Palantir under a little bit of pressure. Let's look at uranium. So nuclear stocks, uranium catching a small little bid here. Names like Oklo, bouncing slightly. SMR, bouncing slightly, but some heavy distribution candles there. NTRA. That's looking like a strong breakout chart, NTRA. Let's look at GRMN. Not doing too much. Let's look at Shop. That's still holding steady. So not really a lot of movement happening here today, which is why we just want to be patient in the grand scheme of things. Oracle very strong yet again. That's pushing up a couple bucks. SMCI, that's holding steady above its key moving averages. That name I'm still bullish on. Nvidia slightly green, Netflix green. Natural gas is the big commodity that's moving today. So natural gas continuing to break out. So natural gas has now had a confirmed breakout. Well, it broke out yesterday. Today you're looking for that confirmed breakout. Very, very strong. Very strong breakout on nat gas. Sarfar is looking at Apple, AAPL. Sure, we can take a peek at Apple. Yeah, Apple holding some support here on the daily chart. Again, you're just at the bottom of this range, this wedge pattern. So realistically, Apple is holding some technical support. Short-term, Apple is a tough name. I am still writing some January 16th 225 calls. So I think that Apple still can have a chance of playing catch-up in this market. But obviously, it's definitely a tough name in the short term. Bearish crossovers of the key moving averages. Still could be forming a rather large inverse head and shoulders, but this needs to really hold here. If you break this level, then you're coming down to sweep this low around 190. But for the time being, Apple is holding some technical support. Bounce is favored off of this level in the near term. For today, 195 or 194 puts. Well, Apple's actually outperforming the Qs and the S&P as well as the IWM. let me go intraday. What are we trading at? 196. Let's look at the 4-hour chart. I would personally wait for a tap of this prior day low at 196.56. If you get rejected off of there, that's probably your aggressive short zone on Apple. Then you can take 196 puts, 195 puts are a little bit more, are a little less aggressive. So if you wait for a tap of this prior day low, that's an area of opportunity to short Apple. And then obviously if you start closing above that, you want to get out of this trade. So that's kind of your liquidity zone right here. You had your hourly chart bounce, bottoming tail, and then a big breakdown. So this is your liquidity zone that Apple needs to get back above. Prior day low, you recapture that, then you need to be out of this trade on the short side. So I have no problem with 195 puts. If you're wanting to be aggressive, 194 puts, sure. But just give yourself a little bit of time. 195 puts are probably better in my opinion. But just be mindful, there is a ton of support here. There's a lot of support. Alright, you look at this previous little gap zone where it broke out. You look at this little bottoming zone here where Apple ended up bouncing tremendously. You look at this gap here, and then you have this ton of volume traded in here where you had massive breakdown, huge reversal to the upside. So there is a lot of support here off the 195 zone on Apple. I'm not gonna sugarcoat that. I think that the short was better at the top of this range. Just be mindful, you could easily float back to the 203, chop in this triangle, this wedge pattern for quite some time before we get a bigger directional move. Okay. Did Apple fill that gap to the downside? Yeah, and Apple did fill that gap yesterday, so just keep that in mind as well. Alright, if there's any other tickers, feel free to put them in the chat. I haven't got to do my usual scan of the market as I've been dealing with internet and Wi-Fi troubles. Let's look at some of these energy stocks again. So names like XLE still continuing to stay firm. XOM pushing up yet again. Valero slightly green, but I hold no position in that. We've trimmed, exited all of our calls in Valero, waiting for a pullback in energy, I think, to get long again. Okay, still holding some runners in XLE though, half the position within the money stop. We are also have crude oil inventories at 10:30 today. So inventories are very big at this point because oil's had a massive spike. So if crude oil inventories come in off of a bigger drawdown than expected, then that's going to be problematic for the markets. Any higher spike in crude again could put a lot of downward pressure on the major indices. Let's look at Meta today. Meta gapping up a couple bucks on the session. Let's look at Google. Google also holding its upsloping wedge pattern, trying to recapture its 7-day moving average. I actually might like Google for a day trade long. Let's look at HUSA, that's gapping down in the pre-market. Let's go through some of those high volume names yesterday, see if they're shaking and moving. Lucid down, so Run obviously down. Ford is flat. Vale catching a bit of a bid. AMD, Verve, that's still holding steady. APPS, guys, is an interesting. This is trying to see some follow through. So APPS is looking fairly interesting for a potential short. Tough name though. SoFi trading at 1450. Palantir again. I'm not really looking to rush any trades today. The bigger movement comes at 2 p.m. and 2:30. We will be live streaming the FOMC meeting. So I think the smart thing to do is make sure you have dry powder for that event. There's going to be two opportunities. The FOMC interest rate decision comes out at 2. You get that initial spike or drop. And then at 2:30, when we have the press conference with Powell, we will look to also have another opportunity there. So basically a standard Fed FOMC trading plan. A lot of traders use this plan because it has high success rate. I've had great success with it too. Say S&P 500 at 2 p.m. falls sharply on the rate decision, you often get a reversal, so you want to buy that fall. Vice versa, if it pops sharply, you typically want to short that pop. So often you want to always do the exact opposite of what the markets are doing. I can't remember the numbers, but I've seen some statistics on that and traded it, and it's a well over 90% success rate, basically shorting or going long off of a drop or a pop. So there should be two opportunities, and then often those are just very quick in and out positions. So if the market, say the S&P today popped on SPY all the way to 600, quick sharp move, you would short it back down, then you can trade it back again on the long side all the way back up. So often price will reverse quickly, but it will retest that wick high or wick low zone. So there's going to be quite a little bit of volatility intraday. Market consensus is for the Federal Reserve to hold rates, and that's probably likely true. I really don't expect Powell to start to pivot here and cut. Labor market data, economic data is really okay, and I think that inflation is still going to be a concern for him. Recently with oil spiking, we just don't know how the Middle East tensions are going to impact the inflationary side along with tariffs. Those are kind of going to be some of the trigger words, I think, for the market. So perhaps going into this, the markets could see a bit more sell side pressure. I wouldn't mind seeing the S&P down a little bit. You can see based on the hourly chart, there is a potential head and shoulders on SPY about to trigger. You know, you haven't broken the neckline, but let's assume that this pattern were to trigger on SPY. We could see a pretty sharp move back down into this 584 zone. I'd love to see this gap fill down at 578 filled. Whether we get it or not, time will tell, but I don't suspect the markets are going to really sell off here at the open. So not too much happening in the grand scheme of things. Let's look at Marvell. Marvell gapping up here. So that's having a nice little breakout. Again, upside target around plus 90. So some news on Marvell. Aggressive short zone around 77.90 is where the stock could potentially head to today. 77.90. So Marvell getting some nice news, the fact that their EPS earnings guidance was well off. That's why it's popping here. Let's look at AFRM. Nothing really there. Let's look at some of the high-flying short interest names. Carvana still down on the session. Wow. Let's look at UPST. UPST is on the cusp of breaking out to the upside. So we'll just take it nice and slow here off of the open. We have about 4 minutes till the open. I am going to switch you to a couple charts here. Not seeing anything too crazy that I want to jump on board with just yet. But we're watching SPY for some trades. I've got Microsoft up here. We'll keep actually Tesla on watch as well, because Tesla has been fairly weak. So let's get ready for the open here. We could actually get a nice trade on Marvell. That is bullish news on it, revising their earnings and guidance. So we could get a nice squeeze on Marvell all the way into the 77 handle, 78 bucks. So I'm going to keep that one on watch. It is pushing here. So I think that pre-market, if we get any dips on Marvell, I don't really know what the option chain is looking like right now, but we'll take a peek. All right, getting ready for the SPY open. Markets are open, guys. Markets are open. Our new core 126 calls briefly went in the money. SPY seeing a little bit of sell side pressure. Again, you have a lot of support at prior day low on SPY. You do have quite a bit of support. So quite a bit of mixed price action for the time being. SPY, Qs are green, Russell down, Tesla seeing some distribution here. Marvell still looking strong, up 7.1%. SPY just still stuck in a range, nothing to do. Nvidia's breaking down here, guys. Nvidia really starting to come in. Nvidia really seeing some downward pressure. Support at 143.30, but Nvidia is breaking down, trying to sweep some little bit of a volume here. There's an aggressive long trade on Nvidia. If we sweep this little low pivot around 143.23. So that's definitely an interesting area. Take a look at our new core. 126 calls are in the money, guys. New core is absolutely flying. So there's an aggressive trade on Nvidia. There's a very aggressive trade on Nvidia. If you sweep this low pivot here, I'm going to take a stab on the long side. Come on. Look at Nucor flying. That was one of our new trades yesterday. Guys, get ready on Nvidia. We're going to have a day trade here on Nvidia. It's sweeping that low pivot. Come on, let it sweep it. Let it sweep it. Guys, did you get filled on Nvidia? I took a fill at 143.21, 143.21. 143.21. Just common shares long Nvidia. 143.21. I will add to the position if it falls to 142.81. So I'm long Nvidia. That was a quick knife down. You swept that low pivot liquidity zone there. Beautiful. Guys, I am all out of Nvidia there. I'm all out. 143.55. 143.55. Nice little trade there. I would consider buying Nvidia if it swept this low pivot now. So a Pierce of 143.10, I would go long Nvidia again. Look at Nucor. Nucor calls are absolutely printing here. Nucor is flying to the high side. If you want to trim some of your calls, 126 calls are in the money nicely. I have no issues. SPY is still struggling here, looking like it's coming back down. Tesla's struggling. Alright, so next buy level on Nvidia is around 143.05. I trimmed half of my NUE, guys. NUE 126 calls that we took yesterday. I trimmed half at $4.50 a contract. Beautiful gain. Beautiful. I'm going to put a stop loss at break even. That was an amazing trade that we took yesterday. A new core, 73% gain on the first lot, and it's still printing to the high side. Steel stocks are absolutely ripping. Let's look at NVIDIA. NVIDIA is still going through some distribution. So that was a nice little win this morning. HIMS is trying to make a move, a breakout to the upside. Guys, I'm looking at buying in an entry on MRVL, Marvell coming back into some previous support. I am interested in taking a potential entry on Marvell. I like this previous little high pivot zone. It's aggressive, but it could work out. Keep MRVL on watch for long. I'm even interested in maybe taking $77 calls on Marvell. Let me see what they're priced at. This is a trade as well. Market's getting a nice bid here. Alright guys, I took $77 Marvell calls for July 3rd. I got filled at 227. 227. So we're playing Marvell, looking for a move into the $77 handle. SPY's still just stuck in a range. Marvell's pushing. Marvell could hit there today. Contracts are already flying, guys. Contracts are already flying. Beautiful. Tesla's surging here quite nicely. Nucor's just absolutely flying itself. Wow, look at Nucor. Look at that break. Marvell's printing. 77's on tap, guys. 77 is approaching. Holy, these contracts are flying. That was the nice little dip. We said watch for a dip. Market's looking very constructive right now. Marvell's continuing. Semiconductors are somewhat lagging. A big stick down on Microsoft. NVIDIA is still struggling. So mega caps are going through a bit of weakness and consolidation. Let's look back at Apple. Come on, Marvell. Keep pushing. Keep pushing. Get these 77 calls in the money today. Come on. Marvell's strong, guys. It's a daily chart breakout. Look at, we're testing 76. We're into this gap zone right now. Beautiful push, guys. $77 calls. Come on. We can get them in the money today. Up 8.84% on Marvell today. I took contracts at 227. They're already trading close to $3. Yeah, let's go. We just tapped $3. Tesla's absolutely flying as well. Look at TSLA ripping to the high side, breaking out here. Tesla's coming into a short zone here. Tesla is coming into a short zone. Guys, if we tap 77 on MRVL, I'm exiting my calls. Holy, Marvell's just ripping. SPY's still stuck in a range. Come on, give me 77 on tap, Marvell. Give us 77 on tap. Marvell's trying to hold steady. A bit of top selling wicks coming here. But again, I'm going to exit these calls at 77. If we tap 77, we should get there. We should get there, providing the market stays relatively firm. China stocks under a bit of pressure today. Nvidia is still slightly negative. Natural gas remaining steady. Apple slightly negative. So SPY, Qs are relatively flat. So realistically, the trades today are looking like they're in individual tickers and not the indices. The indices are just staying stuck in a range here. You can see as we're trading very, very tightly on SPY. So Marvell's been a nice printer today. Nucor's been absolutely running and flying. Come on, Marvell. Take us to 77. Get us there. Alright, let's see if there's any other trade setups that I'm looking at. Let's see. Come on, Marvell. Keep pushing. TMC. What is this TMC? Energy non-minerals. 2.47 billion market cap. Average volume 38. Okay, that's a potential trade. TMC. Wow. TMC. Could be a potential short here on TMC. Alright, Marvell's giving up some goods here. Let's see if it gets bought right back up. We did have a 1 minute chart breakout. This is your first little pullback, decent pullback, since there was some profit taking off of the open. I'm thinking about maybe shorting TMC. I'm just looking at some put options here. Ticker TMC. It's also seeing quite a substantial amount of volume today. $6 put priced at 30 cents on the ask. What would that need to fall? This is the back test on Marvell. It should try to hold this area. If you're not long Marvell, that's your entry. Tesla's still just ripping to the high side. Nucor still up 5%. We banked on that. 73% on the runners, and that's still printing to the high side. Alright guys, high risk trade. This is a very high risk trade. I'm taking TMC. $6 put, June 27th. $6 put, TMC. High risk trade. June 27th. Alright guys, so we have Marvell calls, $77 calls. Those are still printing. I just went into a short on TMC. I repeat, I just went into a short on TMC. $6 put. Nice fall on TMC. Come on. Flip back to Marvell. Marvell's still holding steady, finding a bit of distribution here, but Marvell should try to push up at some point during the day. Markets are still just stuck in a sideways range here. Really no movement on SPY. Come on, Marvell, keep your momentum. What is this ticker? KWE. Wow. Alright, TMC trying to push higher here. It's definitely ripping to the upside. Very tough name to short, but we're taking a stab at it. Marvell coming in a little bit more now, just hovering right at that previous little consolidation. Pivot, this is why you're running into resistance. You're trying to work into that gap. You are trying to work into that gap zone. SPY is still trying to curl to the upside. Marvell making another move here, guys. Marvell is making another move. Seeing a bit of distribution hitting in AMD. Tesla's still firm. Nvidia bouncing off of that long level that we took quite nicely. Market's looking a little bit more firm here. Marvell is continuing to print, guys. Come on. Give us more, Marvell. TMC is still continuing to surge here. SPY's trying to curl up, but still stuck in range, a very tight range. Nucor still up 5.3. Good to see. Tesla up 2%. Nvidia trying to go green. CoreWeave taking a bit of a breather today. So CoreWeave coming in quite sharply right now. CoreWeave looks like it's going to break this bear flag and go lower. You did make a new high today and it is selling into it. So CoreWeave could retest the 157 impulse green candle here today. Come on, Marvell. Tesla's into a really interesting short zone here. Tesla's tagging that previous little low pivot liquidity sweep zone. That is an area where shorts should take control of the price. Tesla up 2%. SPY's trying to break out of its range here. So resistance on SPY's around 599.50. 599.50, there's resistance on SPY. It's an aggressive short zone. Tesla running into some resistance. TMC's trying to blast through here, make higher highs. I'm down right now on my $6 puts for June 27th. This name is absolutely a monster right now. Had a really stunning move back to the high side. Nice spike back up on Marvell, guys. Marvell should take us to 77. We should get these calls in the money. And Marvell's printing, SPY's pushing. Tesla running into a bit of resistance here. And we're still short TMC. That one's starting to come in just a touch. CoreWeave now down 2.87%. Come on, Marvell. Marvell is pushing, guys. We should get Marvell in the money. Come on, break that high pivot. Break that high pivot. We're putting in some higher highs, higher lows. We need to make another higher high here. Market is firm. Odds are it will. Alright, QQQ running into some resistance here. SPY still looking for a short zone. If it pierces 599.50, there's a bit of a short zone on SPY. It's an aggressive short on SPY, but it can work out. Come on, Marvell. Give us one more surge. I'm looking to exit these $77 calls, guys. I'm going to take the full position off of the table. If we tap 77, I will take the full position off of the table. Come on, Marvell. Take it. Let's print it. Still short TMC. Long Marvell. SPY's into your first resistance here. SPY is into your first resistance. Let it sweep this high pivot zone. Come on. A little bit more, SPY. 599.50 sweep. Come on. Marvell's getting close. Ah. Marvell did put in a higher high there, so that's very bullish. Very bullish for Marvell. You're still continuing higher highs, higher lows off of the gap up. That's very strong price action. We should get these calls in the money. SPY is getting very, very extended here in the near term. It's an aggressive short zone, but I'm looking at shorting SPY with the 599 puts. Once we hit this trend line, let's let it sweep this pivot, but get ready to enter some SPY 599 puts. That's at least what I'm doing. These will be 0 DTE. Come on, SPY. Keep going. Keep going. A little bit more. A little bit more into this trend line. Marvell coming in a touch here. SPY seeing some sell side pressure. Tesla still up 1.7. Nvidia's turned the corner and gone green. So we have FOMC set to occur today. We will be live streaming that press conference and trading. And then tomorrow the markets are closed, so just keep that in mind. JP saying Trump is live right now. Thanks, JP. Tesla trying to push back up. Come on, Marvell. Give us 77. TMC is running away right now on me. All right, Marvell right back up to the high side. Come on. Again, I'm looking for a 77 tap, and I will exit these calls. If we look at the daily chart, it is a nice breakout on Marvell, and there is an opportunity based off of fib retrace. Today you could hit 77.82, but I'm looking to just get out of these calls. I want to de-risk ahead of Fed. We can always reevaluate it, but we're already up nicely on the trade. I'm looking for a 77 tap. Come on. Marvell's super close. I'm still interested in shorting SPY at around just below 600, maybe even a 600 tap. China stocks definitely under a lot of pressure today. Yang is catching a nice bid, gapping up 3.47%. So we're still long Yang off the 30.53 level. We're up about 9.4% on the position. I'm looking to trim on that very soon. TMC is still very strong. I'm still holding those put options on TMC. Again, those are $6 puts for yeah, Marvell is a rocket. Thank you, JP. Appreciate that. Again, I'm looking to exit Marvell at 77 tap. We're close. We're very, very close. Come on, Marvell. SPY's still hovering. Tesla's still strong as ever. There it is, guys. Marvell calls in the money. Thank you very much. Boom, boom, boom. I exited all of those at 350 a contract. Exited Marvell at 350. $77 call in the money. Beautiful trade on Marvell. That's a nice winner, guys. That's a really nice winner. Everyone had a lot of opportunity to get in on that trade. I know JP caught it with us. Beautiful. From 237 to 350. Amazing. That was a really nice trade on Marvell, 54% in the books. Let's focus on our TMC. Again, I'm holding put options, the $6 put on TMC. Looking for more downside in this name. And those are the June 27th at 30 cents. I am down slightly, but amazing. All right, Tesla's also into an interesting short zone here. Tesla is into a fade area, guys. Tesla's into a fade area. I'm looking at taking Tesla puts right back down to call it even 315. I could see myself getting interested in these 315 puts. Let me just look at the chain right now. Yeah, guys, I do like puts on Tesla up here. Alright guys, I just took some puts on Tesla. 317.50 at $3.50. 317.50 put. This is a June 20th. It's a tough name. Tough name. So Tesla put 317.50. June 20th expiry. Come on, Tesla. SPY's still trying to hold steady. But we've had a very successful morning. Nice trade on Marvell. Nice trade on Nvidia. Looking for Tesla downside. Looking for TMC downside. Tesla contracts are even at a better fill than myself right now. We'll see what we get here. Again, I think Tesla should retest this lower boundary channel. Hopefully that's today. That would be a pretty big downward shift and move. So you have the S&P still green. Dow Jones is green. Oil's taking a bit of a sell-off here. Copper's still holding steady. Natural gas still very strong. Alert on PGR. What's happening with PGR? Yeah, crude oil inventories are on at 10:30. 10:30. That's a good observation. PGR, guys, that's selling off sharply here. Getting an alert here on ticker PGR. That's an insurance business, Berkshire Hathaway. But ticker PGR is absolutely getting dumped on right now. I do potentially like it for a bounce, sweeping that low pivot liquidity zone. Very interesting on PGR. I do have a long level on PGR around 260.85 for a day trade bounce. 260.85. Tesla's ripping here. Oh, did crude oil inventories come out already? I thought it was 10:30. The inventories. But oil dumping here. Yeah, oil's really falling. So potentially it came out already. I thought it was 10:30. Maybe it was 10. Yeah, I thought it was 10:30 crude. That could just be a technical sell ahead of inventories. But yeah, it could be maybe it got leaked early. Maybe crude oil got leaked early. Definitely dumping for the time being. Nice little revert. It could just also be a technical sell-off. It's extended. It's had sharp moves. Alright, so we're still holding short Tesla. Crude's seeing a bit of weakness. I have a buy level on crude. Let me see the USO chart. The buy level on USO, if we dip into the 80.75 handle, that is a buy level on USO. Still seeing quite a bit of strength in the market. Things are looking much more positive. Apple's up 0.58%. IWM leading the charge to the upside. That's bouncing off of the 20-day. Bitcoin's gone green. First Solar up 4%. Natural gas still holding steady. Nvidia is slightly green. SMCI up 1.46. Oracle up 2.3. Oil's still trying to stabilize here. Under a bit of pressure, but stabilizing. Tesla's starting to come in just a touch here. I'm still riding my 217.50 put. It's one of the stronger mega caps, so it's a tough name to short. But you're trying to sweep this little previous liquidity zone. Big bounce, rejection. SPY's still into a bit of resistance here. It's fallen off of a cliff. I never really wanted to add into any of that position. Yeah, 65% down on the calls. Yeah, that one's just a nasty one. That was just a single entry on the position. Any hope? Sure, there's always hope. It's oversold. It's oversold. You have a nice little weekly divergence, but it's a tough one right now. Again, I would really only consider adding to it. I was going to look to add around this double bottom 234, but you are filling a nice daily chart gap fill right around here, but it does look like it wants maybe 226. That's where I'd consider adding. Alright, SPY's still trying to press higher here, but it's extremely oversold intraday. It could even get a reversal today. USO is still falling here. So we're still seeing a bit of weakness creeping into Tesla. S&P is still strong. This is a short zone on SPY, guys. I'm looking to enter some 5.99 puts, but SPY is into a decent short zone. Call options in OMEX. It's a high flyer breaking out. Process industry, agriculture and commodities, mining. Took $1.50 calls in OMEX. Market cap just sized appropriately. Contracts are cheap. It's a very small market cap, but it is triggering a nice little breakout. Looking for a $1.50 target on these calls. Nice little potential breakout. All right, Tesla going through a bit of distribution here. Still holding TMC $6 put, which is going against me in the near term, but that's seeing a bit of distribution. June 27th on OMEX. This is high risk on OMEX. It's very high risk. It's now 10:12. I'll stay on for another 15 minutes or so. SPY again. I am interested in shorting SPY here. Alright guys, I am in the SPY 599 put, 0 DTE, 599, 0 DTE put. Got filled at $1.32, 599 SPY put, $1.32. Zero DTE. Come on, SPY, give up the goods here. I would add to my SPY contracts one more time at around 600.37. SPY is trying to blast through this zone right now. Tesla still trying to chop around here, coming in a little bit. If Marvell takes a bigger dip today, I am interested in re-entering that position on Marvell around, let me see here. $74 to $75, I'm interested in Marvell again. Alright, Tesla, come on, Tesla, come on down. SPY, come on down. Still very strong price action in SPY. Very, very strong price action in SPY. SPY's continuing. Again, my next add level on this 599 puts on SPY is around a tap of the 600.35 zone. Tesla is breaking down here. Nvidia's surging. Tesla breaking down, but Nvidia's surging. Here we go. Come on, SPY. 317.50 puts on Tesla. Come on, take us down. SPY still hovering at 600. SMCI up 1.7, Nvidia up 0.5% right now. IWM still leading the charge to the upside. That's very strong, up 0.74%. Alright guys, I'm very close to adding into my second lot of contracts on SPY. Right here, it's coming up. Come on, one more little push, and I'll take another fill. Tesla's still cooperating, coming down. Second fill there on SPY at $1.20. Second fill at $1.20. So I'm in a full-sized $5.99 put position on SPY. I will not add to the contracts anymore. Markets are making a nice bullish recovery. Let's see if this is just a morning pump and then backing and filling and chop throughout the rest of the session until we get to FOMC. That's what could be transpiring here. But a really solid surge on SPY. You can see the trend line we're running into on SPY. We should have a pullback, maybe create a right shoulder and chop for the rest of the session. Tesla still struggling under that 323 zone. Come on, SPY, come on down. My average is $1.26 on the 5.99 puts. $1.26. Tesla potential little 1 minute head and shoulders pattern. Remember, Tesla is one of the stronger mega caps today. It was often leading SPY initially on the morning session, and now it's kind of lagging as SPY is continuing to push. Big spike up there on SPY yet again. Wow. Big spike on SPY there. USO is into a potential day trade level long. USO is dumping here. WTI crude really falling, down 2.28% right now, but it is into a scalp long level on USO. Sweeping some 1 minute. SPY is just relentless right now. USO catching a bit of a bid. SPY continuing. Look at the nice dump on USO. So USO is catching a bid here. We'll see if SPY wants to trade inversely. Notice the rally in SPY, dump in oil. SPY is still very strong in this vicinity. It is trying to trend. Come on, give us a dip. I'm down slightly on the trade. $1.26 is my average. SPX, Maria saying it seems like SPX will go to 6,020. We're trading at 6,012. We hit a high there around just below 6,015. Yeah, it could hit there. There is some resistance here though. And it's been a nice little move up here for an FOMC day. I don't anticipate a lot of people slapping the bid and ask here ahead of FOMC. I'd be more inclined to see some backing and filling sideways chop, maybe even some people moving defensively. We just don't know how Powell's going to react, but crude oil obviously seeing some downward pressure today. Tesla still looking somewhat choppy a little bit. Potential head and shoulders. Come on, Tesla, break this head and shoulders pattern. Break that head and shoulders pattern. So USO still weak here, finding some support. It's one of the main reasons SPY has had this phenomenal rally to the upside. It is starting to come down a little bit as oil is trying to catch a bit of a bid here. You can see crude oil trying to form a bit of a bottom here. SPY taking a bit of a breather. We'll see the inverse correlations as it comes. Come on, SPY. Give us a quick consolidated pullback into this previous little area. You can see they're trying to rope in a lot of long liquidity right in this zone. Tesla trying to make another move higher. Look at Tesla again. Tesla still trying to push above this 323.50 zone. That's Tesla's previous little sweep pivot. So it's a big fight zone here for the markets. We are still seeing a lot of strength in the Qs. Qs are trying to pick up steam here. They are trying to overtake SPY. Russell's up 1%, Apple up 0.8. Bitcoin's trending a little bit here. Gold's taking a breather. Nat gas pulling back slightly. SMCI almost up 2%. Meta's breaking out of the 701 zone. High breakout on Meta. Meta is trying to. Microsoft seeing a bit of sell side pressure on the 1-minute chart. Google's dumping here, guys. Google underperforming on the 1-minute chart here. Look at the dump on Google. Wow. That's a significant underperformance, down 0.45%. I didn't even notice that. That's nasty on Google. Alright, Tesla right back at that neckline. Let's see if we can get this trigger. Let's see if we get this downside trigger. Google's firming up now. Nvidia is testing prior day high, so that's the resistance that Nvidia is testing right now. Prior day high should act as some near-term resistance. Look for semiconductors to potentially see a minor bit of profit taking. You still have a lot of strength in stocks. AMD is starting to see a little bit of weakness in this zone. Micron's still firm. SPY pushing yet again. Apple going through a little bit of consolidation. Oil still trying to curl back up, holding the $81 level. Tesla just does not want to break down yet. But oil is starting to curl back up. Let's see if SPY wants to go through a bit of a consolidative downward pressure trend here. Come on. Very tough. Tesla's still hovering right on that little neckline. Has not broken yet. Microsoft curling back up. Nvidia's still right at that prior day high, trying to get through it right now. Nvidia spiking here, trying to spike through prior day high. Tesla right back at that neckline. Down by about 18 cents on these contracts. Come on, give us a little dip. We really haven't had anything yet on SPY. Gold still trading slightly negative. Silver down by 0.82%. Crude oil, WTI crude down by 1.6. Copper up by 0.42. Tesla trying to spike. Microsoft still holding steady. Nvidia trading right at that prior day high. SPY starting to curl a little bit down. Come on, give us a move down. Nvidia is still phenomenally strong here. Sweeping this high pivot liquidity zone on the 15-minute chart. Whether or not it holds, we will see. Tesla still holding. Apple curling back to the downside. Oracle trying to put in a bit of a double top on the 1-minute chart. Microsoft curling back down. Google catching a small bid. Meta trying to have a little bit of a breakout but potentially failing here. Let's look at Amazon. Amazon starting to come in just a touch here. Nvidia still holding steady, holding these semis up. Tesla looks like it wants to break this neckline. All right, the first little break and test of this neckline here on Tesla. Still 1-minute price action, so it hasn't given us the true signal yet. But Tesla looks a little bit vulnerable, putting in some distribution signals right at this previous liquidity sweep zone. Come on, Tesla. Fall a little bit here. Fall a little bit here. Let's look at crude oil starting to spike a little bit more. Trying to firm back up. Hitting your first level of support on crude. That was a nice little bounce area. SPY still holding steady. SPY right back up. Strength in NVIDIA. IWM just made another new high. So IWM really seeing some strength today. Come on, Tesla, give us that breakdown. Marvell up 10% and pushing. Anyone still holding those $77 calls, you're absolutely printing. That was our big winner of the session. Come on, Tesla, SPY. SPY just stuck here at 601. NVIDIA is still holding steady. Come on, Tesla, give us that break. NVIDIA finally seeing some 1 minute selling. If NVIDIA gets rejected here, we should retest this previous little reversal zone on NVIDIA, which would indicate roughly about a 60-cent sell-off on NVIDIA. Tesla's still right at that neckline, guys. Still struggling here. Up 2% though, digesting this hourly chart pattern. SPY still quite strong here. Really no pullback yet. SoFi up 3%. That one's doing quite well. TMC is still strong on the session, but starting to come in a little bit. Let's see if we get our first little lower low since this trend, and then this chart could be cooked to the downside. So we entered quite early on TMC, but we'll see if it wants to cooperate and give us a lower low. Market getting another spike higher here. SPY still holding steady. USO dumping here on inventories, so another downward pressure on USO. Again, inventories are coming out here, and it is applying some more downward pressure. Tesla's starting to trigger this head and shoulders on the 1 minute. Let's see if we can get some follow through. First level of support is at 321. Second level of support is around 320.80. The head and shoulders downside target takes us to about 319.60. Tesla's breaking down. SPY still holding steady. Quite interesting. Quite interesting there. Come on, Tesla. SPY potentially wants to retest that prior day high. Could be trying to head there. Tesla's looking very weak, guys. Tesla's looking very weak. Come on, Tesla. Give us a bigger breakdown. Alright guys, I am going to take a break. I will be back on for FOMC. Basically, my stop loss on these SPY puts are going to be a close back above 601.75, your prior day high. So SPY still is trending quite nicely to the upside, riding that 3-minute 7-day moving average. You have broken out of this interesting little trend line zone. Whether or not we confirm it on a larger term time frame, I do suspect that SPY is trying to put in a bullish pattern. You have your left shoulder here ahead. We should curl down and create a right shoulder on SPY, and then that would give us a potential very nice inverse head and shoulders on SPY to potentially trade into FOMC. But again, every pattern can be broken on Powell and the Fed decision today, so we'll see what has to happen. I would be surprised if there isn't some profit taking, but stranger things have happened. We'll just have to see what SPY wants to do in this vicinity. So you're using this max resistance pivot zone. You can see SPY is trading right into that zone right now. Very, very strong price action off of the lower boundary zone here on SPY. So that head and shoulders new target has been adjusted on Tesla. Did negate that other previous one. Now you have a different head and shoulders pattern, so we'll have to see if that one wants to shape out. Starting to come in just a touch here on the 5-minute chart. Just a touch here, SPY starting to come in. So pretty close to your target there, Maria. We almost tapped 6,020 on SPX. We just came slightly miss of that zone on SPX. We hit about a 6,018. Tesla's still acting somewhat inverse of the market. Crude oil bouncing off of prior day low, USO. Nvidia is still hovering above prior day high. Microsoft under prior day high. Still quite a bit of strength in this market today. Tesla's breaking out here, trying to, negating this inverse head and shoulders. Sorry, negating the head and shoulders. Yeah, you printed a 5-minute hanging man candle on SPY. That's, well, you still got a minute and 40 seconds left on the candle, but definitely a bit of risk to reward here for SPY. SMCI moving nicely. Nvidia still holding steady above that prior day. Microsoft pushing yet again.
Up. Tesla holding the 5 on the 15. Yeah, the VIX still looks weak. IWM looks real strong.
Yeah, that's the fourth rejection on Tesla up here at this level. Uh,
Yeah, Tesla looks weak.
yeah. SPY back under 601. Nvidia got rejected at the level. That's so crazy. 145.37. Come mark that on your chart, the 15-minute chart. It needs to get over that level for continuation to the upside. Palantir getting rejected as well. Everything's kind of pulling back right now.
Wheat is absolutely ripping, up 3% today. Wheat, ticker WEAT, but it's also a
What
futures contract
what
commodity.
pushes weak?
I don't know. I know that was, I think that's Repo's largest position right now.
Bitcoin getting nothing off of this pump.
I mean, it got back over 105. That's saying something, ain't it?
It's under 105.
All right, so Tesla is trying to push. If it gets rejected again, then I'm gonna cut these 330 calls. If it gets rejected and falls under that 2260, that's my stop. 2262 is my stop for these Tesla calls.
I was looking a little heavy here. Besides 600, my big level is 600 spot 60. I know Bull Bear, you said 600 spot 70. I think we're right at that.
Yeah, yeah. Let me see. Jump back in spy. Yep, it's right there at that level, bro. Like it double topped right here. Come on, hold that level. If it comes back to 600 and bounce, that's a actual kind of looks like a cup on the 15-minute handle. I mean, sorry.
This is also the top of the VWAP band.
Yeah.
So, Georgie, what are you looking for the pullback to?
Well, I've got 598 zeros, 600. I would look to trim at 600. We're close. I'm not looking for big moves today until FOMC, so I'm just, taking what I get.
Georgie, if you're watching wheat, watch that Israeli ticker ICL.
ICL, got you.
That's a fertilizer company.
And wasn't there refinery or something hit? I don't know what their input, where they get their inputs from.
Yeah, I'm not too sure. I just had that one. I was talking to Repo about that one with the wheat play.
Okay. Oh, they do potash and phosphate, so I don't think they would be affected by natural gas. Jeffrey down there is the potash. So I was talking about potash. Is it potash or potash? I don't know.
Hot ass.
We call it potash up here.
OMEX is just a dog.
Tesla is trying again for that 324.
Yeah, Tesla getting the bounce, everything. It's kind of
Yeah,
bouncing a little bit.
there it is. Oh, 324. Come on. Just push the fucking 326. 324. Come on.
With Georgian wanting to fade this move, man, even though this is trying to bounce.
Yeah. Yeah, we'll see. Tight leash.
Yeah, I just grabbed some Q puts and I'll cut them if we get above Friday's or yesterday's high, rather.
So we get these FOMC minutes at 2 and then J Powell at 2:30, right?
Yeah, yep, that's what it is.
Copy. in the past 2 days since I've been here in Virginia. Um, these stealth bombers have been very busy down here. Oh, hey man, your MS is up over 132 now, 1.5% for the day.
Yeah, I was looking at the chain on that. 140 has a lot of OI in July. Just a lot
Yeah,
there.
yeah, that's the one he called out. I jumped into a couple of those with him too. Uh,
Damn, it ain't. Man, I don't know what it is. Fuck. Getting the rejection, getting the pullback.
yeah, getting a hanging man on SPY.
A lot of the tech names started to turn around 10:45. I figured it'd be 11 o'clock, but they went earlier.
Tesla 324.30 on Tesla. Tesla is pushing. Come on. 325. Hit it. Come on. I have. Alright, Tesla over 325. Yeah, 326 is my next target for Tesla. Let's see what these calls are doing. They're up 53% on these calls. Maybe I should fucking sell it soon. 326, come on. Can you guys hear these planes in the background or no?
Nope, not paying attention though.
Yeah, I can hear
I got
them.
my own background noise that I hear.
Tesla looks like it wants to go test higher day, 325.61. Come on, man.
See, Rocket Mortgage is up over 4%.
So is Rocket Lab.
This Generac 15-minute chart is just non-stop green candles. It's almost at 126. GNRC.
Ton of option activity on TKO, which I think is the UFC ticker. TKO. The TKO looks options chain looks really bullish.
Yeah, daily chart is really good.
See, peak positive is 175. I guess it's right there.
So Georgia, are we about to waterfall, or are we just been about to play the VWAP?
It does look heavy, doesn't it? Like it's just gonna
Yes, it
waterfall.
does.
Yeah. I want to see it do that because these things are decaying.
Yeah.
Yeah, based on how my MACD is looking, it's just I'm on the Qs. It's just like a play to the VWAP. MACD still looks green and strong.
Using the standard MACD on the 15.
Since I'm not an American,
Yes.
do you guys have a holiday tomorrow? The market's closed tomorrow.
Yes, we do. We have the holiday that most white people detest that trade the market because they don't think that Juneteenth should be a holiday that's shutting the
Juneteenth, that's
market
what
down.
it is. Thank you, Gringo. I appreciate it.
I have to go to work. I
He
mean,
said,
it's a
"Thank you,
holiday,
Gringo."
but it's not really a holiday. Like I have
The
to
the
go to
markets
work.
are closed.
Yeah,
Just
it's a holiday
FYI,
for
if you're doing
bankers and
zeros,
government.
if you're doing weeklies, just know that we don't have a trading tomorrow. Just FYI. Gringos.
And for those of you who may be curious as to why I said what I said, I don't really give a fuck about the holiday one way or the other. It's just that whenever Biden decided he was going to make this a holiday as a symbolic gesture to the response to the cries for reparations, a lot of people on Twitter, FinTwit, just started crying, bitching, and moaning. What is this a holiday about? Blah 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 blah. Shut the fuck up, because you sure you'll take every other goddamn day off that falls on a weekday, but you want to cry about a holiday that really doesn't even fucking mean shit. So shut the fuck up. I'm done. That was my little rant. That's how I felt whenever they was bitching and moaning about it.
Do you know
Yes, I agree with that. I'm an honorary brown person now, so I agree with that.
What does that mean?
Yeah.
I'm from South America now.
He said, "Honorary brown person." I can't.
Well, you don't know Jeffrey because he normally would say something else to go along with that.
Doesn't Canada have like one official national holiday per month? I think that's a good way to do it. Like every month has one holiday that everyone gets off. Like even
Dude, I
this,
honestly think Georgie down here in South America, I think they have a holiday every other week, like maybe two a week or so. Like,
dude, you have a
it's
holiday
crazy.
every lunch. It's called siesta, right?
By the
We
way,
have a
I heard you guys
we have a
talk about
holiday. We have a holiday every month here. Every single month we have a holiday.
every
There's a
week.
reason to go to either barbecue something or go buy some shit.
I don't. What about
Right?
August? I don't think does August have one?
August, I don't know. Look at my goddamn
But
Uh,
yeah, you're. I mean, you're basically right.
remember
calendar. August has nothing.
talking about
No, August has a Canada holiday.
talking
Go
about
ahead, bro.
fertilizer. China's, I think, wheat production due to the dry climate there. drought conditions, they need more fertilizer, so they need to bring in more fertilizer, and that's obviously a huge buyer of commodities. They do own. I think they do produce. I think 10% of the world's fertilizer, potash, but they used to export it, but now they're keeping it because they need to use more and more and more of it. And what was my thought process? Oh, IPI. When I said the sanctions started, it was at $25. It's now at like $37. So that name did hit. Anyways, just 2 cents. And I think the Israel name that Butters was talking about, the convict used to talk about that at like $6. The convict guy, and that's a potash out of Israel. So
Is he back, by the way?
I think he's gone on vacation for quite a while, from my understanding.
Like quote unquote vacation or
Yeah, quote
actual
unquote.
vacation? Okay.
Anyways, we'll be listening to you guys.
Jeffrey, did you jump? Did you drop down yet?
No, I'm still up. I'm just kind
Okay.
of.
No. What are you in right now?
I'm in Bank of America. What I say, 45 calls. They're holding up well. And then I grabbed the SPX. What is it? 60/40s for today. That's it. As far as
Nice.
my trade today. No, sometimes Jerome Powell always, even when he's negative, the
Dip here again, breaking this level on the intraday time frame doesn't leave us much support until we get to this 599.50 zone. Again, breaking this level doesn't leave us much support until we get to 599.50. Does look like a pretty controlled sell-off, so nothing major, but let's see if we get any sort of a quick dump into the support zone. Again, I'm still riding those 599 0 DTE puts. We are looking for more downside, but at this point it is holding up okay. It's a nice controlled pullback. Marvell's looking once again interesting to go long. Marvell looking like a retesting 75. I was interested between the 75 to $74 zone on Marvell. Let's see if SPY wants to have a flash dip into this next support zone. We're just grinding slowly to the downside. Tesla's still remaining firm. Come on, give us a quick dip. Give us a quick dip. Some volume trying to come back into the picture. You're not that fast, so you can only trade one instrument. That's okay, Maria. One instrument's enough to make money. Sometimes trading multiple instruments quickly works out. Sometimes it doesn't, right? Sometimes I get worse fills. But one instrument at a time is very good. So oil's still down 1.57%, but really holding those low dips from inventories. That's still okay. Nice bullish reversal today on MRK, guys. Merck, look at that move off of the lows. Nice potential tail candle. I do believe that this is shaping up for a very powerful inverse head and shoulders pattern. I think healthcare stocks should try to regain some leadership in this market, but Merck doing a nice little reversal. Tesla still staying firm. SPY just slowly grinding here. Not wanting to give too big of a move. 600 psychological number being tested on SPY. So it's certainly coming down here. Come on, a nice little flash crash into 599 would be perfect. I'm looking to take profits in and around this purple zone here, 599.50 to 599.25. Wow, Merck is just going crazy, guys. MRK is just absolutely ripping here. Look at this. We're getting a lot of volume in this name. Huge surge to the upside in MRK. Let's look at XLV. XLV also surging. Let's look at UNH. UNH not really participating as much, but you might get a rotation out of tech into some of these healthcare names. J&J also looks kind of interesting from a long standpoint. Hitting some support. Again, we'll be back on for Fed. I am going to take my lunch early today. Take a little bit of an intraday break. As always, I'm watching these SPY calls and the markets, and I'm looking to take profits on SPY in and around this 599.50 to 599.25 zone. All right, Tesla's still staying strong. All right, we're starting to get a nice little continuation down move on SPY. Our puts are starting to wake up nicely. I got a really bad feel. Anyone that's shorted with Maria up in this zone, you're looking lovely. You're in the driver's seat. Don't let these 0DT go against you. I repeat, don't let the 0DTs go against you. Wow, look at Merck going. Healthcare stocks are ripping here, guys. Was there news in healthcare? Was there news in healthcare? There might have been some news in healthcare stocks. That thing is just ripping. Holy, look at MRK. What's the news hitting the tape here on MRK? Gotta pull up my news feed. Wow, look at Merck go, guys, up 2.1%. This thing is a monster right now. Look at it go. Absolutely ripping face. That's crazy. It's definitely news on that name. Definitely news. So back to Tesla, SPY catching a bid. Healthcare stocks are ripping and pulling it higher here. Merck is now testing 80. I like that. That's beautiful, guys. We just entered $85 calls on Merck yesterday. We just took $85 calls on Merck yesterday. July 18th, $85 calls. And that thing is just flying. We're also riding the farther dated Jan calls of next year. What a move. SPY under a bit of pressure yet again. That's right. We did discuss that, Anonymous. Nice observation. Long-term supports, right? And there's news on it. I like that, Anonymous. I really, really like that. All right, SPY's looking quite weak here. Marvell testing 74.84. Tempted to pick up some Marvell calls here. Tesla's still strong. Nvidia trying to consolidate here. Backing and filling. MRK right back to the highs. That's why charting works. Absolutely right. Anonymous saying, I find it curious how news coincidentally coincides with these long-term trend lines. Absolutely right. That's why they often say technicals will lead price action. A lot of fundamentalists don't want to believe that, but what are the chances, right? Why do these long-term trend lines consistently set up time over time over time? When you hit support levels, miraculously, boom, you hit major news? I don't think so. Now, sometimes, obviously, areas where there's no support, no resistance, the stock hits some news, it can dump, it can pump. It's not always, but there's a high statistical outcome where you're hitting a massive support zone and then some bullish news hits and stock pops, or you're hitting some resistance. Like, I mean, Hood too. Hood, another example where it was trending into those all-time highs, parallel channel, boom. Doesn't get included in the S&P 500. Rejection, right? All right, if SPY doesn't recapture the 600.34 level, it's going to see a hard rejection down. So far, it's fighting to live another day. We're tapping resistance right now. This is a big area where the bulls want to recapture. All right, guys, let's get ready for the FOMC interest rate decision. We have SPY trading at 599.60 right now. It is currently positive on the session. Obviously, SPY took a really sizable dip, so our puts ended up profiting tremendously there. We took the 599.0 DTEs. I am all out of those, looking to probably go long the S&P 500. I think that if we get a dip on SPY, I'm just going to take us to the 15-minute chart because it's going to be increased volatility. But I would love to see a sweep of prior day low off of this Fed announcement. That's where I'd look to buy the S&P 500. Again, we do have the FOMC rate decision commencing momentarily. So let's see what SPY does here. I am also going to pull up the US 10-year yield to see what happens in the bond market. Right now, gold's trading flat, silver down, crude has bounced nicely. All right, FOMC rate decision is out. Markets are catching a bit of a bid. I would look to fade it at the gap around 602. Again, nothing yet in terms of a trade, but markets are spiking. Again, we do have a nice little potential short zone approaching. SPY often sees a reversal off of the first move and then a continuation. So we're getting a nice increase in volatility. SPY is spiking, yields are dropping. We will be broadcasting the Fed commentary. Let's look at Tesla. Tesla obviously spiking here. Guys, I like Marvell down here again. Marvell's into an interesting area. I'm waiting though to see how SPY settles out here. Trying to break out of this little wedge pattern. But no change in interest rates. That's consensus. Range of 4.25 to 4.5. No real change. No real change. Natural gas still roaring. Copper up 1%. Crude up 0.18. Crude oil's had a really nice bounce off of the lows, so it's just continuing to find massive buyers on crude. All right, you can see SPY getting absolutely faded here. SPY getting faded for now. So we might have an opportunity. I was looking for a fade a bit higher, but so far the first move is getting faded. Look at the big reversal on SPY. We do have an area of long opportunity around 597.50. There is an aggressive long trade on SPY around 597.50. Come on, SPY, give us a bigger move. I want a bigger range than that. The S&P 500 is really flat on the session here. Up about 0.2, Qs are 0.2, relatively flat. IWM still the strongest. Apple maintaining positive price action. Bitcoin slightly negative. Data dependent right now. Oil continuing to shake and move. Let's look at the IWM. Big top wick on the IWM. This is the retest on SPY. That initial move got faded. Again, I have a buy level down here around 597.15. We're going to try to master the SPY trade here. So I'm going to go to a little bit of a larger time frame. We're looking at the SPY 1 minute and 15-minute chart here. Let's take a look at the hourly. Hourly, again, you're holding this area of demand right now. SPY continuing to come down. I'm just watching two SPY charts because I'm going to get a 0 DTE play for us. We will look for a potential play here. I will be live streaming the Fed decision. All right, SPY is coming in nicely. SPY is coming in nicely. Come on, SPY, give us more. Again, I'm looking for a starter position around 597.50. It might be a touch lower than that. Again, around 597.50, I like it. Hitting this upsloping trend line yet again. Come on, give us a little bit lower. Obviously, we will get a secondary volatile move around Powell. But I'm looking at SPY calls. I'm looking at 0 DTE, 598 calls. 597s would be a little less aggressive. But I'm looking at 598 SPY calls. Once we get down to this 597.50 zone, we're going to retest this liquidity zone. Maybe even let it pierce that. Come on, take us down. Markets are just back in their choppy sideways range, still hovering off of the lows. SMCI doing extremely well today. SMCI retesting some lower boundary. Again, Marvell is kind of piquing my interest. Again, we traded this with great success in the morning. It is backtesting some key areas into a pretty good risk to reward zone here. Let's look at SPX. And see SPX is almost at the bottom of this channel yet again. We've bounced once. This could be a potential inverse head and shoulders forming, which should give us upside to about 0.8%. Take us well over 6,000 again. Wow, Coinbase, what a move on Coinbase. They up 14.7%. Hood is making new highs on the session. 22 minutes until Powell comes out. We will be live streaming Powell here. SPY catching a nice bounce. Let's look at Tesla again. So Tesla hit our bullish target, coming down to the bearish target potentially. SPY, I'm still looking at a long on SPY, guys. But it needs to go lower. So keep it ready on the docket. SPY still just hovering around this area. So we do have the Fed stream queued up, ready to go. We will be broadcasting the Fed stream live. Alright, so SPY is still trying to push higher here. I repeat, SPY is trying to push higher in the grand scheme of things. I still have a long level around a Pierce of 597.50 on SPY. That's where I'm looking to go long. I repeat, I am looking to trade SPY on the long side at a Pierce of 597.50. CRCL circle, that's trading into all-time high right now. Very interesting. Crude oil trying to go positive right back to the highs of the session. Crude oil is trying to go positive. Gold caught a nice spike. VIX is still lagging. Yields are still soft. Wow, Upstart up nicely. SMCI continuing to grind here. PayPal struggling today. That's down 3.06%. PYPL. Meta lagging the market slightly green, still holding positive price. MongoDB struggling. Let's look at Lennar. Lennar coming down a little bit more. Regional banks are doing well today. They're up sharply. Again, IWM still holding firm. Again, Powell will be on in about 13 minutes. We will broadcast it live. The dollar's still weakening here. Datadog, what a breakout in DDOG. Wow, that's a stunning chart. Huge. Carvana doing well today. Coinbase, what a monster candle on Coinbase. So still holding its bullish momentum off of its highs. Still holding okay. Again, China stocks under a bit of pressure today. Marvell, Lotto at 74.10. Yeah, nice. I do like Marvell. I think that that is a very strong ticker to play, regardless of what the market does. Realistically, we kind of have a clear intraday stop loss. If we were to get a close below this little trend line, you stop out there. But what strike are you taking? Marvell did a go to 74.10. I'm thinking about doing the July 3rd strike again for $77, just rinsing and repeating that previous trade. That's what I'm thinking about doing. But I'm really hoping to get a SPY play. I like Fed announcements. I like to play the indices for a nice 0 DTE. But I am looking at Marvell as well for a call option. I'm looking at the July 3rd $77 calls again. That's what we took this morning when it started to dip into this initial support. But I do like Marvell. SPY's starting to weaken just a touch here. Oh, I was about to, yeah, I know, I was about to take the trade, but I haven't yet. I'm just waiting. I think what's gonna happen on this FOMC press conference, I think we're gonna get a dip down and then a continuation rally in the back half after the afternoon. So what I'm expecting is a nice dip and then a pump. That's what I could see happening. GME doing well today. That's up 2.7 off of its highs though. Enphase continuing to find some momentum. DraftKings continuing to rip here at the highs of the chart. That's a wonderful breakout chart on DKNG. Nice daily chart, confirmed breakout along with the weekly candle. Yeah, I know, Surfer. Sometimes I'm wrong. I'm wrong plenty of times. And the price action showed me that. I hope you took it. When did we discuss DraftKings? Was it a couple days ago? You should have told me you're entering. Oh, okay. But yeah, DKNG breaking out of a nice daily chart pattern. You know, you're into a little bit of resistance here at this pivot, so I would wait for a bit of consolidation here. But this chart looks ready to go off of this continuation. So it does look very, very strong. DKNG. Marvell is trying to creep back up. I'm just worried about SPY. I think SPY still has a little bit lower price action to go. I would love to see another dip in SPY. All right, 7 minutes till Powell. Let's see if he's out on stage yet. Nothing yet. 4 minutes till showtime for SPY. 4 minutes till showtime for, sorry, Fed Powell, Chairman Powell. So far, the market's really got that initial spike up and back in the same range. So we're looking at buying dips, shorting pops, guys. We're looking at buying dips, shorting pops. I'm going to keep both the SPX and SPY on the chart so we can see both sets of indices. Again, SPY, I think if we dip down to prior day low, could be a potential buy opportunity there, entering 597 calls. So far, we have 2 minutes till showtime. FOMC still continue to be strong. Again, SPY and Marvell are kind of my top trades. We're just keeping 2 SPY windows open. Of course, the Fed YouTube channel's lagging a bit. Yes, Powell is live.
Policy leaves us well positioned to respond in a timely way to potential economic developments. I'll have more to say about monetary policy after briefly reviewing economic developments. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were driven by businesses bringing in imports ahead of potential tariffs. This unusual swing has complicated GDP measurement. Private domestic final purchases, or PDFP as we call them, which excludes net exports, inventory investment, and government spending, grew at a solid 2.5% rate. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a decline in sentiment over recent months and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.4% this year and 1.6% next year, somewhat slower than projected in March. In the labor market, conditions have remained solid. Payroll job gains averaged 135,000 per month over the past 3 months. The unemployment rate, at 4.2%, remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment.
Why is melting up?
The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.5% at the end of this year and next, a bit higher than projected in March. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.3% over the 12 months ending in May, and that, excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up over recent months, as reflected in both market and survey-based measures. Respondents to surveys of consumers, businesses, and professional forecasters point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 3%, somewhat higher than projected in March. The median inflation projection falls to 2.4% in 2026 and 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%, and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to trade, immigration, fiscal, and regulatory policies continue to evolve, and their effects on the economy remain uncertain. The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level, and thus of the related economic effects, reached a peak in April and have since declined. Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It's also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension, If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year, the same as projected in March. The median projection declines to 3.6% at the end of next year and to 3.4% at the end of 2027, a little higher than the March projection. These individual forecasts are always subject to uncertainty, and as I've noted, uncertainty is unusually elevated. And of course, these projections are not a committee plan or decision. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on issues related to assessing the risks and uncertainties that are relevant for monetary policy and the potential implications for policy strategy and communications. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference that we held last month. We are open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up any modifications to our statement on longer-run goals and monetary policy strategy by late summer. After that, we will consider enhancements to our suite of communications tools, including the SEP. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Colby. Thank you. Colby Smith with the New York Times. To what extent has the more limited impact from tariffs at this stage on inflation changed your view on what the ultimate economic fallout will be from these policies and the timing of when they will materialize in the data?
So we've had 3 months of favorable inflation readings since the high readings of January and February, and that's, of course, highly welcome news. Part of that just is that services, core services, both housing services and non-housing services, have really been grinding down toward levels that are consistent with 2% inflation. So that's the good news. We've had goods inflation just moving up a bit, and of course we expect, as you point out, we do expect to see more of that over the course of the summer. It takes some time for tariffs to work their way through the chain of distribution to the end consumer. A good example of that would be goods being sold at retailers today may have been imported several months ago before tariffs were imposed. So we're beginning to see some effects, and we do expect to see more of them over coming months. We do also see price increases in some of the relevant categories like personal computers and audiovisual equipment and things like that that are attributable to tariff increases. In addition, we look at surveys of businesses, and there are many of those, and you do see a range of things, but many companies do expect to put all or some or all of the effect of tariffs through to the next person in the chain, and ultimately to the consumer. Today, the amount of the amount of the tariff effects, the size of the tariff effects, their duration and the time it will take are all highly uncertain. So that is why we think the appropriate thing to do is to hold where we are as we learn more. And we think our policy stance is in a good place where we're well positioned to react to incoming developments.
So in terms of how we should interpret the rate cuts penciled into the SEP, is this reflecting that there's this expectation that underlying inflation will just stay well enough contained that allows the committee to eventually move ahead with those cuts? Or is it about, responding to a deterioration in economic activity, let's say? I mean, how should we make sense of the forecast?
So if you look at the forecast, you will see that people do generally expect inflation to move up and then to come back down. But we can't just assume that. Of course, we don't know that. And, our job is to make sure, one of our jobs is to make sure that a one-time increase in inflation doesn't turn into an inflation problem. And that, again, that will depend on the size of the effects, how long it takes for them to come in, and ultimately on keeping inflation expectations anchored.
Hi, and thanks, Chair Powell. Howard Schneider with Reuters. If you look at the rate path starting in December to today and adjusted over the full time horizon you've got there, you've taken about a quarter point per year out of your projected path, and you end at a higher rate at end 2027 than you would have in the prior forecast. Is that a result of a sense that tariffs will lead to more persistent inflation? Is it a result of reassessments of where your short-term neutral rate is? Why are you on a slower path now?
So I would focus most on the nearer term. As you get out to the later years, it's hard for anybody to know where the economy is going. You didn't see people moving their longer term, estimate of the neutral rate, for example, at this meeting. So and those things are probably slow moving. So I think if you look at what's happening here since March, this is since March, right? You see a little slower growth, just a tiny tick up, 1/10 tick up in unemployment, and you see inflation moving up 0.3. And by the way, it was a similar move from the December SEP to the March. So that's what you see. You see the effects of tariffs. I think we learned in April, after the March meeting, that substantially higher tariffs were likely. And then since then, the estimates of where the tariffs will be have actually moved back down, although still at an elevated level. So we're adapting in real time. And what you see is an accumulation of individual assessments.
You say in the statement that risks have diminished on that front, but the July 9th, drop dead date for all the Liberation Day tariffs is still out there and unresolved. You've got now exchange of missiles between two Middle East adversaries with a possible U.S. involvement. How can you justify saying that risks have diminished?
So what we said was that uncertainty uncertainty about the economic outlook has diminished but remains elevated. Many surveys say that. They do. So and that's actually a line from the Teal book, which you can see in 5 years. Remember to check that.
Maybe the war will be over.
No, but if you think about it, tariff uncertainty really peaked in April, and since then has come down. And that's really what that's just acknowledging. It's diminished, but still elevated. That it's uncertainty. So I think that's an accurate statement.
Chris Rugaber.
Thank you. Chris Rugaber at Associated Press. There is an argument out there in favor of cutting rates more immediately. Inflation has continued to cool and is back to roughly 2% despite the tariffs. And I guess I also wanted to ask about cracks in the job market with gross hiring slowing, concentrated in just a few industries. We've seen some housing data, including this morning, that have been pretty weak. Do you see any concerns that the economy is weakening and that is a reason to cut rates going forward?
So we do of course monitor all those things. I think if you look at the overall picture, what you're seeing is 4.2% unemployment and an economy that's growing at a rate hard to know given the unusual flows in the first quarter, but it appears to be 1.5%, 2%, maybe a little better than that. Sentiment has come up off of its very low levels. It's still depressed. So you can point to things. The housing market is a longer run problem and also a short run problem. I don't think it's indicative of, basically the situation is we have a longer run shortage of housing, and we also have high rates right now. I think the best thing we can do for the housing market is to restore price stability in a sustainable way and create a strong labor market, and that's the best thing we can do for the housing market. You asked about the job market. Again, look at labor force participation, look at wages, look at job creation. They're all at healthy levels now. I would say you can see perhaps a very, very slow continued cooling but nothing that's troubling at this time. But we watch it very, very carefully. So overall, again, the current stance of monetary policy leaves us well positioned to respond in a timely way to economic developments, and for now, and we'll be watching the data carefully.
Well, just quickly on, given that there are concerns inflation will rise, but there is the alternate scenario that tariffs would create demand destruction and slow growth sufficiently, and that would perhaps keep a bit of a lid on inflation. Do you see odds of that scenario? What kind of odds do you see of that scenario coming true, and how many months of cool inflation would you need to see before concluding that maybe that lower inflation scenario is taking place?
So this is very much the conversation we had today and yesterday. There are many, many different scenarios, many combinations of scenarios where inflation does or doesn't prove out to be at the levels we think, and where the labor market does or doesn't soften. And I think what you see people doing is looking ahead at a time of very high uncertainty and writing down what they think the most likely case is. No one holds these rate paths with a great deal of conviction, and everyone would agree that they're all going to be data dependent, and that you can make a case for any of the rate paths, I think, that you see in the SEP. And we do this once a quarter. It's a hard thing to do particularly at this time, but it does reflect. If you see somebody writing down a rate path that involves cuts, that's them saying, yes, I think we will get to a place, more likely than not, where cuts will be appropriate. And it could be a joint probability of a number of possible outcomes. Again, remember how much uncertainty we face, though.
Thank you. Mr. Chair, I wonder if you could describe for us some of those scenarios. How do you get to a place? I'm noticing that the uncertainty levels in your forecast are very high. How do you get to a place where you have the confidence in the outlook for, say, inflation and or growth or the unemployment rate? How many months does it take, and what do you want to see in the data to get to that level of confidence to actually reduce rates off the restrictive level?
So it's very, very hard to say when that will happen. We know that the time will come. It could come quickly. It could not come quickly. As long as the economy is solid, though, as long as we're seeing the kind of labor market that we have and reasonably decent growth and inflation moving down, we feel like the right thing to do is to be where we are, where our policy stance is, and just learn more. And in particular, we feel like we're going to learn a great deal more over the summer on tariffs. We hadn't expected them to show up much by now, and they haven't. And we will see to the extent to which they do over coming months. And I think that's going to inform our thinking, for one thing. In addition, we'll see how the labor market progresses. So at some point it will become clear. I can't tell you exactly when that will be. And meanwhile, we'll be watching the labor market very carefully for signs of weakness and strength, and tariffs for signs of what's going to happen there. And of course, there are many developments ahead. Even in the near term, developments are expected on tariffs. So I think we don't yet know with any confidence where they will settle out. We have an estimate, and I think all estimates are now pretty close together, but it's highly uncertain.
When you say estimate of the impact of tariffs on the core PCE, is that what it is? And could you share that?
What you start with is what's the effective tariff rate overall, and people are managing to that. But the pass-through of tariffs to consumer price inflation is a whole process that's very uncertain. As you know, there are many parties in that chain. There's the manufacturer, the exporter, the importer, the retailer, and the consumer. And each one of those is going to be trying not to be the one to pay for the tariff. But together, they will all pay for it together, or maybe one party will pay it all. But that process is very hard to predict. And we haven't been through a situation like this. And I think we have to be humble about our ability to forecast it. So that's why we need to see some actual data to make better decisions. We'd like to get some more data. And again, in the meantime, we can do that because the economy remains in solid condition.
Nick Tamarosa of the Wall Street Journal. Chair Powell, I guess I'm wondering if you could explain a little bit more the divergence we see in the dot plot, particularly around the 2025 rate projections. I realize this is, you have one group of officials that are putting down no cuts, another that are putting down more than one. And again, recognizing that could be difficult to summarize, but is it a matter of people having a different outlook or a different reaction function, a different commitment to defending against another inflation mistake? How did that play out over the last 2 days?
So you're right. This is often the case. We have a pretty healthy diversity of views on the committee. We did have strong support for today's decision and broad agreement that our policy stance does leave us in a good place. But I would point to two factors, and you mentioned them. The first is just that parties have a diversity of forecasts, and they do align with where their dots are. So if you have a higher inflation forecast, you're going to be less likely to be writing down, more cuts. But remember, as we see more data, we're going to learn more about where inflation is headed, and that means when it is time to look at resuming our normalization process, the differences you see should be smaller because we'll have seen actual data. Right now, it's just a forecast in a very foggy time. So that's the first part, is forecast. Secondly, people can look at the same data and they can evaluate the risks differently, as you know. And that includes, the risk of higher inflation, the risk that it'll be more persistent, the risk that the labor market will weaken. People are going to have different assessments of that risk. So that you put that in there too. So those are the two ways that the two things I think that drive these things. Remember though, as I mentioned earlier, with uncertainty as elevated as it is, no one holds these rate paths with a lot of conviction. So that's really where it is. It's a function of those things, and I think as the data come in, you should see those differences.
Basically, don't trust the Fed's data and projections.
You've said the policy is in a good place and that it's modestly restrictive. Given all the uncertainty you just talked about, tariff levels, uncertainty around the pass-through, is it price increases versus margin compression, some of the softness that Chris talked about in labor and housing, why wouldn't it be better to have rates at a more neutral setting as the economy heads into this period of very high?
If we break this level, we could see a sharp drop. Here it goes.
That's what you would say, but that's not. We have to be forward-looking, and the thing that every forecaster, every outside forecaster, and the Fed is saying is that we expect a meaningful amount of inflation to arrive in coming months, and we have to take that into account. So I think a backward-looking look would lead you to a neutral stance, but we can't. We have to look at that, and because the economy is still solid, we can take the time to actually see what's going to happen. There's a range of possibilities on how large the inflation effects and the other effects are going to be. So we'll make smarter and better decisions if we just wait a couple of months or however long it takes to get a sense of really what is going to be the pass-through of inflation and what's
they're starting to print
on spending.
Here we go.
Hiring and all those things.
Up almost 30%.
Michael McKee from Bloomberg Radio and Television. Your friend down at 1600 Pennsylvania Avenue continues to lob insults in your direction, and I'm wondering, given now that the Supreme Court
trimming
has
here a little
maybe
bit
carved out the Fed from some of the legal implications of that, whether this is just noise that the markets and everybody should ignore until your term is up, or whether you worry that it could lead to more pressure on confidence on Wall Street, on consumers, about the outlook for the economy.
Okay. From my standpoint, it's
nice,
it's not complicated.
Nice, man.
What everyone on the FOMC wants is a good, solid American economy with strong labor market and price stability. That's what we want. We think our policy is well positioned to, right now, to.
I still think we go lower.
And to be able to respond in a timely way as the data lead us around.
I'm looking at flipping my puts into calls off of prior day low.
And again, we think we're in a good place on that to respond to significant economic developments. That's what matters. That is what matters to us. Pretty much that's all that matters to us.
Don't let the trade go against you if you're green.
Assuming you are not reappointed, would you stay on as governor when your term as chair ends?
I'm not thinking about that. I'm thinking about this.
Here we go. Come on, next wave down.
Thanks, Mr. Chairman. I guess with workplace raids increasing, picking up significantly, what kind of effect would that have on the labor market?
Sorry,
in the short
with
term?
what picking up?
Workplace raids.
Here we go. Here we go. Come on.
You know, I wouldn't want to speculate. One way to get at that from an economic standpoint, we of course don't comment on immigration policy. It's not ours to make or comment on. But what you see is an unemployment rate that has been really solid and at a low level not really increasing. It's been in a good range and well within the range of mainstream estimates of maximum employment. And that means, like, part of that is that
Up
labor
over
demand and
40%.
labor
Come on.
supply are kind of moving down at the same
We
rate.
should go a little
Labor
lower.
demand is softening. You see that in job creation, but it's still kind of at a healthy level. And labor supply is diminishing because the immigration numbers that we see are much lower.
Let's go. Beautiful. I just trimmed more there, guys. I'm out of the majority. I only have 3 contracts left.
The other thing I wanted to follow up.
My next trim is at prior day low.
Elaborate on the
Beautiful.
changes to the SEP that you suggested were part of the framework review, I think.
So the framework review really has 2 tracks, right? The first track is our policy framework that is reflected in the consensus statement. And we've said.
All right, guys, we're going to flip long soon. Prior day low. This is some support here.
So we're well along in that process. We've had the meetings that we need to have, and we're now going to be going.
Here we go. Okay, I'm looking at 597 calls. I want one more little flush. Sorry, I'm turning Powell down because we're making money. All right, I am out of all of my calls here. $1.67, $1.67. I trimmed there. I'm looking for one more little flush. Come on. Let's tap prior day low, and I'm looking at 597 calls. I'm flipping bullish. I'm going to flip bullish momentarily here. So we just banked on the put side. Come on.
The SEP is part of it. Many other ideas. It's sort of, how do we think our communications can be improved? There are a number of ideas. People offered a really, it was a great conversation.
Contracts are sitting at $1.35. I'm very tempted to enter here. 597 calls. Come on. I want to tap prior day low or pierce it. One more little move. Sweep this liquidity zone here. Come on. Here we go, guys. Here we go. Almost ready. Come on. One more little flush. Don't bounce me. Don't bounce it. Here we go. All right, it's aggressive. I am in, guys. 597 0 DT calls. I am in at $1.15. I'm long SPY.
You said today the inflation data is in a good place. We don't know how tariffs are going to impact prices going forward. That's uncertain. But I've got to go back to the last time that you cut rates in December, and there was still the what if of tariffs. So
that was the tap, guys. Everyone should have been able to enter there. We're already printing. Come on, give us more. Let's pump it now. Let's pump it. We're going to rip. We are going to rip. Let's go. Look at this. We're already printing. If you want to take a trim, by all means. But we should try to press off of this level some more. Come on. Come on, pal. Rip us.
This was long before we had any idea of what the actual policies would be. We've learned that tariffs are going to be substantially larger than forecasters generally thought.
We tapped that prior day low. That was the entry. Hold, SPY, hold, hold. We're back testing that gap again.
That's what happened. And so now you saw 2.5% forecast in December. You saw 2.8% in March, and you see 3.1% now. So it's 0.6 higher inflation for 2025, and that's a big part of the change, and that's due to the effects of the tariffs that are, we don't know where they're going to land, but it's pretty apparent they're going to land higher than outside forecasters were really guessing at the end of last year.
My follow-up to that, I think consumers, right, we're looking for relief on rates.
Testing lower.
Mortgages, car loans, small businesses want to take out more manageable loans. When you look at the cumulative inflation over the past 5 years, prices have risen over 20%. It's been a rough road. So what is the tipping point then for the wait and see approach in terms of how much it's going to help versus when it hurts the American consumer?
Well, I mean, we're trying to restore price. The best thing we can do for the public that we serve is restore price stability. If we can, and we will, restore.
We're trying to break this.
2% inflation on a durable, sustainable basis. That, and also maximum employment. If we restore those things, that's the best thing, and that is our goal. The best thing we can do for the American people, for households and businesses, that is the ultimate thing that we can deliver. And they can make their decisions without having to think about inflation all the time. meantime, we have to keep rates high to get inflation all the way down. They're not very high, let's be honest. I would say policy is modestly or moderately, probably modestly now restrictive. If you look at the economy, it's not performing as though it were performing under very strict monetary policy, very restrictive monetary policy. So I would say probably modestly restrictive. And so what it will take is confidence that inflation is coming down. Now, I would say without tariffs, that confidence would be building, because if you see what's happening with non-housing services and housing services, which are the other two big pieces other than goods, those are coming down really nicely now. So I think we have to learn a little more about tariffs. I don't know what the right way for us to react will be. I think it's hard to know with any confidence how we should react until we see really the size of the effects.
Members, I just took a SPY swing trade 601 July 3rd calls, 601 calls July 3rd, as well as we're riding the 0 DTE play.
Wages are moving up. Real wages are moving up at a healthy clip.
Look at the bounce. Come on.
Is 2.3% headline inflation over a 12-month basis. So it's a good economy and a solid economy.
Give us more.
Thank you, Chair Powell.
Come on.
That uncertainty has come down. The economy is moving at a solid pace. Inflation has come down over the past 3 months.
Keep it here.
And this is all moving in the right direction. So are you indicating here that Americans should expect some sort of economic pain in the second half of the year?
I'm not saying that at all. From our standpoint, what I can say is that the U.S. economy is in solid shape. Inflation has come down. The unemployment rate remains at 4.2%. As I mentioned, real wages are moving up. It's a good job creation is at a healthy level. Unemployment, again, as I said, low. Labor force participation in a good place. So, and what we're waiting for to reduce rates is to understand what will happen.
Guys, look at that.
Tariff inflation, and there's a lot of uncertainty about that. Every forecaster you can name who is a professional, forecaster with adequate resources and forecasts for a living is forecasting a pretty significant. Everyone that I know is forecasting a meaningful increase in inflation in coming months from tariffs, because someone has to pay for the tariffs, and it will be someone in that chain that I mentioned between the manufacturer, the exporter, the importer, the retailer, ultimately somebody putting it into a
Look at the pump, guys. If you're wanting to trim on your 0 DTEs, now's the time. I'm looking for a little bit more, but I did take a minor trim off of that trend line.
The cost of the tariff has to be paid, and some of it will fall on the end consumer. We know that because that's what businesses
Still holding
say.
the majority. Come on. We got more. We got more.
So we know that's coming, and we just want to see a little bit of that before we make judgments prematurely.
And follow up on that. So you spent years though talking about how you're data dependent, and be a little more direct on this.
Come on, SPY. Come on. Give me 598. Give me 598. I want these calls a whole dollar in the money. Come on.
No, I mean,
might be being greedy, but
monetary policy has to be forward.
Come on.
That is elementary. You've got to be looking. I always talk about the incoming data, the evolving outlook, and the balance of risks. We say that over and over and over again, right? So it's always forward looking. If at the very beginning of the pandemic, we cut rates to 0 immediately. Nothing had happened. We just knew that it was going to be really bad, right? So we took very
SPY, come on, next leg up.
Because we knew things were going to.
Here we go. We're busting through. We're busting through.
So
we've already banked on the short, guys. We banked tremendously, about 85% on the SPY put. Now we're banking on the 0 DTE play. Let's go. Come on, let's go.
Businesses, were.
Members, I also took a Marvell $77 call again.
You talk to business people now. There's a very different feeling now.
Look at SPY printing, guys. These calls are trimmed. I just trimmed.
It feels much more positive and constructive.
At $1.90 there.
So, again, we think that our current stance of monetary policy is in a good place.
Let's go. Guys, I'm out of majority of my SPY 0 DTEs. I have only 3 running contracts. We took them from $1.15, picked, telegraphed that prior day low buy. Went long. I'm glad you caught that with us, Anonymous. Wonderful job. I have 3 contracts running. I am out of the majority of my contracts for a beautiful gain.
I don't see them at all as intention,
So we banked on the put side.
The Fed overstaffed.
We banked on the long side.
And I
That's how we trade FOMC, both directions. I said there were going to be two opportunities, and we banked on both. And now I think the markets can potentially start its next leg up. Obviously, pending any sort of escalation in the Middle East, I think the markets can climb the wall of worry and head higher now.
To do a buyout, we're gonna show the public, we're gonna demonstrate that we are good stewards of public resources. So we thought, and I thought,
amazing trades.
This is a time when we can, we grow at about, our headcount is growing at about 1% a year. So over the course of a couple of years, we're doing a careful scrub of the board and all the reserve banks, and we're gonna find 10% of employees who can do something else, where we can streamline our operations, and we think we can get there in a couple of years. We think we can do that, and we think this is without taking risks.
Don't let the trade go against you if you're late.
Critical missions. So this is something you do very carefully.
And I still have 3 contracts on the 597 0DT calls at $1.15.
I've had experience, a lot of experience.
No worries, Sarfraz. At least you made one raise.
With headcount reductions and things like that, and this is how you do it professionally. You do it carefully, thoughtfully, with a lot of planning, and you do it over a period of time. And I think
nice little potential consolidation here.
No one will notice any.
Come on, Spy, give us one more pump right back into 599 zone. That's your previous little area of consolidation.
Good stewards of their resources. We're effectively wiping out 10 years of headcount growth with this. So, I mean, we wanted to show that.
Video obviously breaking there.
Stewards.
How is progress on reducing headcount going so far? Are you on track to meet the goal?
We're just at the very beginning. As you know, we're doing a buyout program.
Spy is starting to curl down. I do have levels lower. If we go lower, I do have levels lower.
You don't want to do it every year or anything, but you can do it at intervals, and you wind up not interfering with your ability to perform your jobs.
Chair Powell, Claire Jones from the Financial Times. As you're no doubt aware, the Senate Finance Committee has tabled its version of the reconciliation bill this week, and I was wondering if you could tell me a little bit about the tenor of the debate at the FOMC over the past few days on fiscal policy and the degree to which that influenced people's projections for 2026 and beyond. Thank you.
Yeah, so we don't sit around and debate or really discuss. We take fiscal policy as fully exogenous, and so we actually really didn't talk about the bill or the contents of it. It's still evolving. When it gets closer, remember also we have a very, very large economy, and the effects will be at the margin, I expect that they may already be in, but they will be in by the next meeting. We'll make an estimate, but it's not a major thing. It's nothing that we discuss. It may have been mentioned a couple of times, but as something that's coming in. But I think the outcome is, we don't know the outcome yet there, so hard to be
Apple's struggling. It's gone negative. SMCI is still strong. Tesla's still holding up.
Thanks, Chair Powell. Neil Irwin with Axios. There have been some cutbacks in economic statistics collection in the last few weeks, and worries that long-running problems around funding and response rates may be getting worse. How much is this concern on your radar? How much confidence do you have that the gauges you're watching to assess the economy are reliable right now?
Two things. One, the data we get right now, we can do our jobs. I'm not concerned that we can't do our jobs. That's not the point. The point really is that we are starting to see layoffs and important gatherers of data are saying that they're having to cut back on the size of their surveys. That's going to lead to more volatility in the surveys. I think we should take a step back and, from our standpoint, and I think the standpoint of businesses and governments and everyone, having really good data on the state of the economy at any given time is a huge public good. It helps, it not just doesn't help the Fed, it helps the government, it helps Congress, it helps the executive branch. More importantly, really, it helps businesses. They need to know what's going on in the economy. The United States has been a leader for many, many years in this whole project of measuring and understanding what's happening in our very large and dynamic economy. And I hate to see us cutting back on that because it is a real benefit to the general public that people in all kinds of jobs have the best possible understanding of what's happening in the economy and hence what's likely to happen. It's very hard to measure what's going on in the U.S. economy. If you read, there was a book called, well, it's really remarkable how many things you need to understand to estimate U.S. GDP. Very, very difficult, and it's so important that we get it right. I just would say it's not a place I would want to keep investing in that, for the good of the general public.
Victoria. Hi, Victoria Guida with Politico. So you're conducting this monetary policy strategy framework review, but next year we're supposed to have a new Fed chair, and I'm wondering if that affects at all the way that you're approaching this. How do you ensure that this framework will actually be durable?
The framework document goes back to 2012, and it's the committee's document. It's not like we're going to invent a brand new way to do things. It's been an evolving document, so it shouldn't depend on who the chair is at all. It should depend on what's happening in the economy and what the committee wants to do. So, yeah, it isn't really tied to any particular chair. And we used to renew it every year. Now we do it every 5 years. So, but I don't think I've never heard anyone raise this issue that a new chair might want to come in and go in a completely different direction. I really don't think that's right. But but that's not going to be up to me to decide.
Is that affecting at all who you're consulting with?
Not at all. Not in any way.
Thank you. Chair Powell, Matt Egan from CNN. Relatively low gas prices this year have helped drive down inflation in recent reports, but that trend is starting to reverse given the crisis in the Middle East. How are you thinking about how the Israel-Iran conflict will impact the economy, especially inflation? And what lessons were learned during the 2022 period when another conflict, the Russia-Ukraine war, sent oil and gas prices skyrocketing?
So, of course, we're watching, like everybody else is, what's going on. I really don't have any comment on that. Possible that we'll see higher energy prices. What's tended to happen is when there's turmoil in the Middle East, you may see a spike in energy prices, but it tends to come down. Those things don't generally tend to have lasting effects on inflation, although, of course, in the 1970s, they famously did, because you had a series of very, very large shocks. But we haven't seen anything like that now. The U.S. economy is far less dependent on foreign oil than it was back in the 1970s. So, but there.
A quick follow-up. I've just got to ask you about artificial intelligence. Some technology executives have recently been warning that AI could wipe out a large chunk of entry-level jobs and significantly increase the unemployment rate. I'm wondering how concerned you are, if at all, about the threat that AI poses to employment.
So this is the question. The question really is, will AI be more augmenting labor or replacing labor? And I wouldn't, we all see those announcements, including one today. I wouldn't, overread a couple of data points, because, AI should be creating jobs at the same time. It may be replacing, maybe doing both. Anyone who's done any work with AI will have been a little bit stunned at how capable it is. And it's just a different thing. So I think this is something that certainly has transformational potential. And probably we're in the very early stages of it. They say what you're seeing now compared to what you'll see in 2 years is going to be very different and even more effective. So I think it's really hard to know. That, of course, there are optimists who feel like it's going to make everybody much more productive. And there are those who think it's going to replace an awful lot of jobs right across the income spectrum, white collar, blue collar, and everything. So I just don't know. We don't have a house view on that, but this is going to be a very important question for some time.
Greg.
Thank you. Greg Rapp from MarketWatch. I was wondering if you could step back a little bit, Chair Powell.
Here we go. Next leg up. Next leg up in SPY.
a spate of articles and a lot of op-eds now in the newspapers saying that the U.S. economy and the global economy is going through this profound change, you know, akin to the end of the Bretton Woods era in the 1970s. And don't you owe the American people like some sort of like explanation for what we're going through? I mean, I noticed earlier this month when you talked about Bretton Woods a little bit, and you said that Bretton Woods, the Fed staff had to like change how the dollar, movements of the dollar was impacting the economy. Are we going through something like that now? That, you know, are you having to change how you do monetary policy? Is it that fundamental a change underway? Thanks.
It's certainly a time of real change. You know, from a geopolitical standpoint, from a trade standpoint, from an immigration standpoint, you see this not just here but everywhere. So there's quite a lot going on. It doesn't change the way we do monetary policy in the near term. I mean, but and it doesn't change our objectives or what we need to do. And you know, these things are not really our issues. They're really issues for elected governments. All of those issues are really for elected governments. But there's no question it's a time of real change, and very hard to see where that goes. You know, will it be?
Look at this stunning
written about how it's
liquidity
going to
sweep
be more
on
inflationary
SPY.
time. That's possible. It's not guaranteed. You know, AI could cut in the very other direction. AI could make people much more productive and
We should press higher.
push in the other direction. I don't know though. So, but you're right. But honestly,
Once
our
Powell
focus
comes
is
off the
a much more
stage
practical one
and this
than
press conference
how do
ends,
keep
we could
inflation
absolutely rip face in the markets.
in the near term. That's really what we're about.
Liquidity is being sucked out of silver. Liquidity is being sucked out of gold. Come on.
Hello, Chairman Powell. Mark Hamrick with Bankrate. What is the view about the growing amount of slack in the job market, including the softening in payrolls, the forecast of a modest rise in the unemployment rate, and the ability of workers to demand wage hikes or not in this environment where you have inflation surging?
You don't really see unemployment going up. You don't see increased slack really. I mean, at the margin, remember you're at 4.2% unemployment. That was for many years. That was a extremely low level. It happens to have come up off of an even lower level as we came out of the pandemic. We were as low as 3.4%, but 4.2% is probably at the low end of estimates of the longer run, sustainable level of natural rate of unemployment. So I guess I wouldn't agree with that. And also, in terms of wages, you know, real wages after inflation have been moving up sort of more than was consistent with 2% inflation. They're still moving up at a healthy clip, and I think much more consistent with 2% inflation given a reasonable assessment of trend productivity. So it's a pretty good labor market. You know, you're right that the level of job creation has come down, but so has the supply of workers, the change in the supply, the new supply. So you've seen the unemployment rate remain pretty stable at 4.2. It's been as high as 4.3, but you know, those are good numbers. So it's pretty good labor.
This is bullish commentary. Come on, SPY.
The more concerning thing is there are not a lot of layoffs, but there are not a lot of job creation. The number, if you're out of work, it's hard to find a job, but very few people are being laid off at this point. So that's an equilibrium we watch very carefully, because if there were to be significant layoffs and the job finding rate were to remain this low, you would have an increase in unemployment fairly quickly. But that hasn't happened. It really hasn't happened. The U.S. economy has defied all kinds of forecasts for it to weaken really over the last 3 years. And it's been remarkable to see just again and again when people think it's going to weaken.
Members, I'm closing my China short, Yang, Y-A-N-G. I just sold it at 33.61 for just over 10%. Closing my China short, Y-A-N-G.
There's been a lot of talk about cuts. I wanted to ask you, why do you think there are no forecasts for rates to rise or even to stay where they are next year, given that the projection for inflation is to rise to 3%, and there's a lot of there's some skepticism over whether those price hikes will be a one-time event?
So there are a number of people on the committee who wrote down no cuts this year, but some cuts next year. So, I think, people are writing down their most likely path, right? They're not saying there's zero possibility of other things. Really, it's, think of it as the least unlikely path in a situation like
SPY
this.
is going to absolutely melt here. Come on.
I think,
let's pump it.
Again, people write down their rate paths, and they do not have like a really high conviction that this is exactly what's going to happen over the next 2 years. No one feels that way about their rate path. They feel like, what am I going to write down? I mean, what would you write down? It's not easy to do that with confidence. So I would just say it that way. We don't rule things in or out. Certainly a hike is not the base case at all. It's not something people are writing down. But in the meantime,
again, I closed my Yang short up here, 33.61.
Of the different forecasts and different reaction functions that people on the committee have. So thank you very much. Thanks.
Here we go. This is typically where you get the most bullish. Now that it's now that Powell's actually off the stage, this should be where market continues to trend. Let's see what's happening here. All right. So we were slapping some calls there. We traded the short side. We're long calls. Look at this. Here we go. Those 0DT 597s are trading at 214. We're up a full dollar. Come on. Can we get 601s in the money by the close? Let's not be too greedy. We also entered Marvell. We traded that one successfully this morning. We're riding the $77 July 3rd calls. That's a bit of a swing trade. But SPY, if it recaptures this zone here, you can see it's running into this hourly chart resistance, forming a nice little tail candle. If we can get through this resistance, then we could push all the way for 600. Come on. I would love to see SPY get back inside of this reversal candle, this Monday reversal, this impulse gap up candle. That's where I want to see SPY get back to. Press it, SPY. Press it. Marvell doing really well. That's continuing to grind higher here. Natural gas soaring and roaring. Crude oil back down 0.5%. So we are seeing crude oil taking another spike down. That's very bullish for the markets. We want to see crude oil now fall a little bit. Tesla remaining very strong. Nvidia bouncing back. Microsoft bouncing back. Apple surging here. Let's look at Google, because Google is weak all session. Maybe there's a bit of a swing trade here. Google daily chart still looks pretty poised to continue higher. So overall, we didn't really learn too much from that Fed meeting. It was all redundant. You know, they're going to be data dependent. We're going to wait for things that the market wants to tell us. 601 0DT lottos? No, I can't do those. That's too risky. Those ones, I mean, Anonymous wants to play 601 0DT lottos. Holy smokes. Let's see what those are priced at. 14 cents right now. 14 cents. No, I can't do that. That's I like my six. You got in the 600s. Yeah, 600 is doable. 600 is definitely doable. I do think that that's probably a better one. This would be the dip to potentially get into the 600s right here. But I took quite a few trades at the bottom of this range, so I'm very happy with what I have. Just a 3x, just a 3x. But yeah, 600s could work. That puts you right back to this upsloping trend line on SPY 15 minutes. So 600s could work. I do like that. As a lotto. But I'm still riding my 597s runners, taking most of the profits. We already entered some July 3rd upside calls on SPY. We came down to our target to a T on FOMC. We played the short side, we banked on that. We've played the call side, we're banking on that. But that was a stunning move up and down. We caught both directions. I'm very happy as to how that trade went. Please hit that like button on the stream. We've just produced a lot of alpha in the last 20 minutes, half hour. We are certainly in the driver's seat. Come on, SPY. Break through this little resistance. Potential little bear flag on the 1 minute chart now, actually. This is, SPY loses this 597.69 or 597.70 pivot, then there could be a bit of trouble. It is trying to trigger a head and shoulders. It's trying to get people bared up right now. One could say that there was a head and shoulders pattern that triggered. You came down, triggered it, reversed back up, so negated it, but you're still teetering right on that, near that neckline, that it could go either way. But I'm going to give the higher low pattern the benefit of the doubt. Come on, SPY. Hold it. Hold it steady. Don't dump. We are starting to see a bit of weakness. So SPY is struggling here. It's actually coming down. We're likely going to test some next support. 597.20 and change. We are starting to see some weakness. Could this head and shoulders be coming to fruition? We need to watch for that trigger. Uh-oh. We're starting to melt, guys. We are starting to melt. All right, so SPY losing a little bit of momentum here. This is starting to look potentially nasty. Nasty. If we lose prior day low, that's troublesome for SPY. You can see it here on the 1 minute chart. Considering we hit my target off of a nice oversold condition, we lose this prior day low, that's nasty. I do not have any more calls on the 597s. I was stopped out at break even on the 3 running contracts. Again, this would be an area to aggressively go long yet again on SPY. But we are running into a bit of sell side pressure, and the Dixie's trying to firm up at the lows here. Let's see what rates are doing. Rates are still a little soft. Crude oil still down slightly on the session, but bouncing here. All right, maybe this is a 0 DT play. 600 calls now. Let's see what we can get them at. Even 599s would probably be juiced. 600 calls are at 7 cents right now. What about 599s? 17 cents on the 599s. All right, guys, I'm going to risk it. 599, 0 DTE call on SPY. Got filled at 17 cents. This is an aggressive trade. 599 call, 0 DTE sized for loss, filled at 17 cents. Markets are potentially seeing a bit of a breakdown. Nice little bounce continuing. Look at the bounce. Come on. Keep going. Give us more. Give us more. Defend that double bottom prior day low. Defend price. Come on. Take us back to 5.99. Let's pump it. Come on. Come on. We're trying here. We're trying. Markets are trying to push. Come on. Contracts are now trading at 22 cents. We're up 5 cents a contract. Moving nicely in the right direction. Here we go. Come on, give us a nice pump into the close. Double bottom being defended off of a higher low. Notice that the low intraday before Powell was defended so far. That's at least a short-term positive. Now you're making yet again a higher low that almost tried shaking people out. Right on that prior day low again. Come on, SPY. Keep pressing, keep pressing. Look at this. Here we go. Come on. Keep going. Come on, you got more. I have not trimmed. Come on. Let's keep going. Get these 5.99s in the money. We don't have a lot of time. 28 minutes left for a big surge into the close. We are net green. Contracts are at 28 cents here. They're pushing. They're pushing. If we get a big spike up into this 5.99 level, I will exit all of my calls. I'm holding 25 calls at 17 cents. Thank you, Maria. Thank you. Come on, give us another pump. We're running out of time. Big surges tend to happen into the close. Volume, a lot of people wait and buy within the last 30 minutes of price action. That is a very big strategy that is used among hedge funds and Wall Street and successful traders. They buy into the close. You get short coverings into the close as it costs money to hold shorts overnight. Come on, contracts are 27 cents so far. Push, 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 push. We're up 10 cents a con here. Come on. Here we go, 11 cents a con. Come on. Keep grinding, keep grinding, keep grinding. Keep grinding. Getting to 5.98. Getting to 5.98. These will change drastically once we punch through that 5.98 level. You'll kick in some more call buying. Come on, people buy that strike zone. We're seeing price trying to move up here. A little bit of resistance. Come on, SPY. Get back up. Get back up. You got more. Don't let this trade go against you if you're in it. Because this is a 0 DTE play, I'm just going to hold a break even at 17 cents. In the event that we get a big spike up, but I have a stop loss at 17 cents. I'm not taking profits. I want to see a potential double on these contracts at 34 cents before I take profits. I'm glad I make you laugh. All right, we're starting to potentially test that 5.98 strike zone. Definitely some sellers up there, but we should punch through it. We should punch through it. These contracts change quickly. Very, very quickly. Again, do not let this trade go against you. My stop is a hard stop at 17 cents. That's my entry price. We're trading at 24 cents right now on the 5.99 0 DTE calls. It is fluctuating as time progresses. We are slowly running out. Theta will kill us. Here comes a big punch. Boom! 5.98. Come on. That changes things drastically. Let's get some call buying. Come on. The volume's starting to pick up. Here we go. We're almost at 100% here. We're hitting 100%. Boom! Let's go. Come on. That's what I'm talking about. All right, I took my first trim up over 105%. I trimmed half of my contracts. Beautiful. We still have runners. Get these. Can these 599s get in the money? Come on. Come on. Take us to the promised land. A little bit more, Spy. We got 24 minutes. Again, I have 12 contracts left. I've trimmed 13 at 105%. Still have a break-even stop loss. I'm tempted to put this to in the money, but these contracts, because we're running out of time, will change so drastically and fast, even if we get a little minor dip. That's why I'm just going to hold at break even. The trade is risk-free. We're up 100% right now. We're pushing even more. Come on, here we go. Let's punch it to 599. Come on. I love FOMC days. It's one of my favorite times to trade. Had a nice long afternoon off. Coming back, we hit the puts on SPY. We hit this initial call. Then we took calls yet again. Thank you, Anonymous. I appreciate that. Hey, some days you're just on it, right? You're locked in. I was ready for Powell. I was doing a lot of analysis last night. It's very nice to know when you're heading into a meeting with basically no surprises in interest rate expectations. There is virtually a 0% chance of any surprises. And I love that. When the market knows what the Fed is going to do, it's much easier to trade around key technical levels. Maria, if you subscribe, I'm here every morning, Monday to Friday, around 8:30 a.m. We do our pre-market analysis. I trade with you till about 10:30, 11 in the morning. And then I take a little bit of an afternoon lunch where the lighter volume trends pick up. And we usually jump back on for power hour session from 3 to 4 p.m. All right, SPY, come on. One more little surge into the close here, and I will be a super, super happy man. Stunning price action, though. Really solid price action to trade today. We had a lot of volatility. We are starting to see a little bit of weakness. Let's look at energy stocks. And there could be another trade setting up in energy, guys. So we banked on Valero, XOM, XLE. I like the price action that we're seeing in energy. I want to see some backing and filling, digesting some of these patterns here. You know, rig, I'm very tempted to get long rig again because that's one of the highest energy beta names there is. Oxy's backing and filling here. I just want to see how oil reacts. I'd love to see oil retest its previous little 7-day around 69 bucks again. I would be a buyer of energy stocks again. You can see how extended USO is. It's even more overbought than WTI crude. But keep energy on watch because there are some trades there. RTX, what an exit on RTX yesterday on our call options. Wow, that's crazy. What a reversal today. That's insane, eh? Look at that reversal. Amazing. Amazing. SPY still continuing. Where I would buy RTX, I'd look for another entry. If we came into that trend line, let's throw up a fib retrace from this low. Just making it simple. 140, guys. 140. Keep RTX on watch because 140, a pierce of 141 is a nice little area of opportunity. Let's look at Lockheed Martin again. If there's any quick tickers you guys want to take a peek at, by all means, let's discuss it. Let's look at some copper stocks as well. SCCO, that's holding steady. Freeport McMoran. Coin today is just absolutely a monster. Wow, look at coin. That's crazy. And Bitcoin hasn't moved. Just that's what happens with news. Henry wants to look at Reddit, RDDT. Yeah, that was a tough chart. That looked like it was consolidating. I remember seeing some posts online about it, and I meant to pick up some calls, but I hold no position. That's a strong chart. That's a clear daily chart breakout. Very strong potential for a squeeze higher into the 180 zone. What I would be waiting for here is some sort of a 4-hour chart consolidation pattern. That's what I would wait for. You know, I'd like to see it retest that 20-day moving average, which is at 128.36. So in order for me to get long this name, I need to see some serious backing and filling. Some near-term consolidation would be ideal. As long as you remain above 130, this is a very bullish name and likely going to trend higher. But I would wait, if you're not long off of this breakout, wait a little bit for some backing and filling and then take a potential entry. Let's look at AI, that's still struggling. Let's look at XYZ, that one's a nice little reversal hammer candle. AMD, still down a little bit today. Micron, still an extremely overbought chart. That's right, Maria. That's exactly right. 8:30 to 10:30 and then 3 to 4. And then often I'll stay past 10:30. But that's right. Let's look at the semiconductors, SMH. SMH still super strong, but here's the thing about the SMH. It's allowed the 7-day moving average to catch up with it. So I'm expecting SMH to test these all-time highs or at least sweep this liquidity pivot up here in the coming sessions. We're looking at a sweep of around 269 sweep. That should occur. IWM holding its key 20 moving average. That was an epic buy on IWM. I don't have a position in small caps or the IWM indice, but if you took the long entry off that 20, you're looking golden. We're looking absolutely golden. Let's look at the NDX. Again, the NDX just backing and filling, kind of in no man's land, below the 7, above the 20. I think XLV, I'm extremely bullish on healthcare. I think healthcare is the next star. Look at these 599 calls. We are going to get them in the money. It's going to tap that 599 level. Come on, it's going to tap it. It's very close. It should get there. That was a stunning. I will exit these calls if we get a push right into 599. They're trading at 40 cents from 17 cents. My entry. First trim was 105%. Come on, keep pressing. Tesla's still looking a-okay. Took a small little loss on the Tesla puts today. Could have closed them in profit at the lows, but I was not watching. All right, guys, I'm getting ready to exit all of these 599 0 DTEs. We're well in the driver's seat. They're trading at 44 cents right now. Come on. But a nice monster move off of the lows for SPY. Really strong. It's been a healthy session for us. I like airlines down here. They are testing that lower boundary support zone. I think airlines are into a good risk to reward. I do think oil is going to take a bit of a breather. You can see it's trying to sweep this liquidity on JETS ETF. I think it's going to hold this area and press higher in the coming sessions. One of the reasons why is you look at the highest beta energy stock, which is arguably ticker RIG. RIG is really going through some hard distribution, down 3.58%. It's really put in its topping or a top here off of this daily hanging man candle. And over the last 4 days, even though oil stayed extremely elevated at the highs, RIG hasn't really participated. So I think that RIG might be an early warning that oil could go through some backing and filling. I mean, you just simply look at this range that oil's been dipping in. That's a wide range. That's about almost a 10% range, right? So I think oil's getting a little bit extended here. It needs to see some lower price. And if it does dip 5 to 10% in the near term, we should see Jets Airline probably pick up off of here. But we're buying a little support zone. And I do think that these call options can work out quite well. Let's look at some of the airlines. AAL not looking as strong. Let's look at UAL. Yeah, UAL also holding steady. Boeing's back testing some critical support levels. Hood is still very strong. Final 10 minutes here into the close, guys. Final 10 minutes into the close. Tesla coming down. Contracts the 599 0DT calls. So we banked today. It's been a very, very profitable stream for us here. All trading live. We telegraphed a couple levels, especially off of this prior day low. There were 2 opportunities right on SPY to trade right off this prior day low. That was a tremendous, tremendous session. Selling into the close here, markets are seeing some weakness. Amazon calls should be bought here. Let's take a look at JP. Yeah, you're right. Amazon is a tough, strong name up here. Seeing a bit of a reversal down, but still a strong chart. Very strong chart. Yep, that could work out, JP. That's not a bad area. I'm a bit of more of a stickler. It could head down to about 213.66, but you're just splitting hairs at that point if you give yourself time on the clock. I mean, it's a very strong chart. It does shape up. This could be the lower part of an inverse head and shoulders. You know, if Amazon starts to curl up here, you could easily be creating an inverse head and shoulders. There's a very, very strong pattern for that in case. Let's look at Meta. Meta's tough. That one I think needs to fill its gap. Apple trying to firm up off of the lows. Again, Apple is holding technical support, lower boundary wedge pattern. I'm holding farther dated calls out into next year, Jan 26. Eventually, Apple will firm up. I was actually looking at Google. Google appears to be doing a little peekaboo breakdown. But you know what? The Amazon chart's probably a bit better. So I have no issues if you're wanting to take that long trade on Amazon. JP's got the 215 calls August 15th. Oh wow, you got yourself a lot of time on those. Let's see what those are priced at right now. Yeah, those should hit for sure. That's definitely a pretty safe trade. The only thing I could see here is Amazon could retest the 211.73, so a pierce of 212. I could see Amazon trying to retest that, making a peekaboo break down, failure of this upsloping trend line. But your time frame is really good. I mean, it should press higher. So 215 calls, yeah, they're priced at around $11 here, 11.05. So I like those right at 211.73. Oh, we actually just wicked down and pierced that trend line. Actually, that could be the little breakdown there. That was a nice wick down on Amazon right there, guys. Yeah, right down there. We just saw a little bit of a liquidity sweep potential of that trend line. Let's look at Amazon here. Look at that little dump there on Amazon. That's a nice little liquidity sweep potential occurring of this trend line. You can see you're back testing that key trend line. That's a good area. It's a decent area. But what I was looking at, you throw in a fib retrace right at this 211 zone, 211. So a little bit of selling into the close. You have had a few names turn negative. You can see the massive area that we're trying to hold above on SPX, right? SPY coming down here into the close. It's a really big pivot high from May 19th on SPY. A really big pivot high. So late day sell side pressure into the close. Look at Google dumping into the close. Amazon under pressure. Let's take a peek at Nvidia. Nvidia spiking. Apple spiking. So you can see a bit of clear distribution, right? Microsoft. But Google getting smacked here into the close. Let's look at Meta. Meta getting sold into the close. AMD okay. Micron okay. So some stocks caught bids, some stocks didn't. Let's look at Tessie. Tessie getting smacked into the close as well. Google tomorrow is coming into a really interesting long area, guys. If Google gaps down tomorrow into its 20-day moving average at 172.52, that's a nice long trade. All right, wonderful trading session here, guys. Wonderful trading session. I appreciate you all for tuning in. That is a wrap on the markets. That is a wrap on the markets. Yeah, nasty close. So obviously into the close, you had SPY, QQQ go negative, IWM held positive, Apple maintained bullish structure, weakness creeped into the equity markets due to the fact of Google. But look, in the pre-market after hours, we're already starting to shoot back up. Amazon and Google got absolutely clapped into the close. They got absolutely demolished into the close there. You did have strength in Apple and Nvidia. Let's look at Microsoft into the close. Microsoft still stayed firm pretty much all day. Nevertheless, great job trading FOMC with us. Thank you, Sarfaris. Thank you, Henry. Thank you all, Maria, Anonymous, anyone, JP, for tuning in. Billy, Peter, on Telegram, thank you all for tuning in. I hope everyone was able to catch at least one trade with us. We had great success in Marvell, SPY today. Really good session. Those 0 DTEs absolutely printed for us. But we will enjoy the day off tomorrow. It's Juneteenth holiday, so the stock market is closed tomorrow. The US equity markets are closed. So keep that in mind. There is no trading tomorrow. So I will not be doing a live stream. I'll probably put out some content of some videos, doing analysis. Maybe I'll hop on for a live stream, just a quick little 45-minute chart review of some particular names. But other than that, thank you all for tuning in. And please give that stream a like down below if you haven't. And thanks for your support, guys. We'll see you on the charts tomorrow.